¿Qué tal? ¿Cómo están? Muy buenos días.
Good morning to all of you, and welcome to this event on the Huruma Fund, the impact investment in times of pandemic. Very welcome to this event that is going to be hybrid. It's going to be partly virtual, and some people will be sitting in the room with us. Welcome to the people not just sitting in the room with us here today, but all of you listening to us through streaming www.conferenciahurumavirtualeventos.es. We want you to be able to participate at this event. You're going to have two different channels to be able to do that. We want to listen to your questions, your comments, your views. You can do this either virtually if you're listening to us online through the streaming chat. And those of us who are here in this room, we have microphones throughout the rooms that you can ask for any questions or comments you wish to make. We're going to try to be very, very strict with the timings, and we also have clocks around the hall so you could comply with the time as allocated to you as much as possible. I'd like to tell you that the Huruma Fund is aimed at financing smallholder farmers in rural areas. It's a fund for impact investing to provide access to financing in rural areas and also to increase the financing available for smallholder farmers in especially vulnerable areas such as Asia, South America, and Caribbean. With us here today is Xiana Mendez-Bertolo, Secretary of State for Trade from the European Commission. Thank you very much for here. We're going to be able to see you in a minute because you're going to be through video conference. And José Luis Curbelo is the president of COFIDES. Thank you for welcoming us to your venue. And opening the event is going to be Xiana Mendez-Bertolo, the Secretary of State for Trade.
Gracias. Bueno, yo también voy a
Thank you very much. I'm going to try to be very strict with the time assigned to me, although it's a very exciting initiative. We've been waiting to be able to make it public, and now it's fully running. So all good news this morning. And I think we're all very, very excited about this initiative. I would like to also greet Leonard Michi, who's connected remotely. He's the director for the GDEFCO, our dear José Luis. Congratulations in advance. And all the panelists. As the Secretary of State for Trade, it's an absolute honor for me to be able to open this event on a very innovative activity, which is impact investing. In the over 30 years of history of value that has always distinguished COFIDES, that it is a complement to private investing, and the two main pillars of its double institutional mandate and activities. On the one hand, it contributes to the development of countries that receive these funds and also to make Spanish companies more international. COFIDES is an excellent example of how to continually adapt to modern times, where aside from the financial profitability of their investments, they're always demanding a positive impact on society. Just to give you a few figures, in 2019, a high percentage of the portfolio of COFIDES were devoted to professional development of employees. A very significant part included technology, and they generated over 9,000 direct employment through their financing and also thousands of indirect jobs. We have to highlight the huge advantage of investing in these kind of initiatives like today's Huruma Fund that provides this additional advantage from conventional funds that we're all familiar with. I would like to once again congratulate the team of COFIDES, and I think for this great achievement, and also thank the European Commission for leading these kind of financing policies, which is fairer, more sustainable, and greener. It's essential this impact investing to support emerging economies and also to increase the bank servicing for many operators in essential services such as agriculture is going to be allowing to capitalize various initiatives and make all this more competitive and sustainable both for the environment and society worldwide. The Huruma Fund that is being presented today at this event is an excellent example of how to put this kind of idea into practice. The main objective of this fund is to improve access to financing of the smallholder farmers that are very often excluded in Latin America and the Caribbean, sub-Saharan Africa, and Asia. So in order for this to be successful, it's been essential to be able to coordinate and know well all the various players who are on the field and the smallholder farmers, all the financial intermediates, and also to be able to mobilize so efficiently and successfully private equity to provide the necessary financial resources to complement public resources. And let's not forget, this initiative is also an excellent example of public-private partnership in Spain. I mentioned earlier AFID, the European Union, and the private sector that is contributing 70% of funding mobilized through the commitments of this fund. I would like to highlight this in particular, and also the role of the Spanish accredited entities. On the one hand, AFID as financer of the COPRODE fund, and also COFIDES as the manager of these funds from the European Union. We believe this partnership is a very efficacious and pioneer partnership, and we hope that it is a model for others to follow. And it's to support financial inclusion and growth and development of the countries that are partners of Spanish cooperation, and also as an entity to be able to leverage the resources of the private sector. And also the Spanish private sector has played a significant role in the design and management of this fund, and this will be done by the asset manager, the Spanish company Bbva Capital, which is a pioneering company in Spain in impact investing. And finally, I don't want to forget mentioning the importance of the international agenda for development in the current times, and especially the private sector. We believe that this focus of impact investing that we need to be working on must ensure that financing is inclusive and sustainable in the areas where these investments are carried out, and even more important within the current context that we live in, which is so fragile in financial terms, and many of the emerging economies where we want to work. In this case, the Sustainable Development Goals are the absolute reference for delimiting the priorities for sustainable development worldwide, and also in line to the Horizon 2030, whereas this 2030 agenda and its goals are directly aimed at public administrations. Precisely, it's the Agenda 2030 where for the first time the private sector has a very clear and key role to play, an essential role to facilitate the contribution of all types of organizations to this framework of priorities, a framework of priorities for all of us. And that's why the Agenda 2030 in the private sector has three objectives. First of all, increase the presence of companies in new sectors, industries, and markets. Second is to enhance sustainability and growth, and thirdly, to increase the role of private companies in the achievement of sustainable development goals. And it is these three objectives with which we want to contribute to the Huruma Fund. And I would also like to take this opportunity to encourage all Spanish companies that are participating at this event, either in person or remotely, to get to know these kind of initiatives better, such as the Huruma Fund, and also join them so that we can achieve the Sustainable Development Goals all together. Thank you very much, and congratulations.
Secretaria de Estado, muchísimas gracias por...
Thank you very much, Secretary of State. Through virtually with us is also Leonard Michi, the head of nutrition and food security of the European Union. Whenever you're ready, Mr. Michi.
Buon dia a todos. Thank you, State Secretary Bertolo, and thank you, Mr. Cordero, from CEO of COFIDES. For us, this is a momentous moment with COFIDES, with the State Secretary, with ACID, and with all the partners. I think today's launch, given the context that we are living in, every day, not only in Madrid, but in Brussels, where I am calling you, but Europe and beyond, COVID is clearly having an impact and a toll on all of us, and especially on the most vulnerable. And I think today's event is a bit of a stock take of how a fund like Huruma, and this is a topic which we are scaling up within the European Union, how can we build back better and hopefully bounce back from COVID in the coming months and year ahead. We know as well that COVID is creating inequalities, and hopefully Huruma and the portfolios that we will invest in together in the context of also a Team Europe. I think this is also a recognition between Spain and the European Union and the European Commission services. We can work as a team in development cooperation. So this is clearly, as the State Secretary knows, and as the as COFIDES know, we are now working. We are at the stage of pre-programming. Hopefully, we'll get a resolution on the market framework period for 2021-2027. And once we have this, we are at the stage also discussing with the External Action Service and with the Member States Team Europe initiatives. And this is a good timing of accompanying the process for the period 21-2027, because the figures out there will not be nice figures. We know that extreme poverty is going to be on the increase, not only in the Latin American context, but also in sub-Saharan Africa, in the fragile countries, in the small island development states, with lower remittances, with higher indebtedness, with lower tourism receipts. The numbers on extreme poverty are going to increase, especially those on acute food hunger. So if we can show in the coming months and years ahead that with our contributions, the European Union is contributing 10 million in terms of first loss and just under 9 million in terms of the technical assistance facility. And this is the approach that we have been engaging not only with the Spanish authorities and with the Spanish agencies, but we have been trying and testing this process with other agencies. And my colleagues later on will explain what we have been trying to do on the Aggregate and with the International Fund for Agricultural Development, the ABC Fund, which we also launched a year ago. So together with this portfolio, and again, I have to insist in a Team Europe approach, I know how Spain is very strong also on its vision on agri-food systems, and also with the home-based agencies. If we can pool all this expertise together, we can truly show impact with the most vulnerable, impact on small farm holders, impact on women-led organizations looking into gender mainstreaming, and also looking into indigenous populations. I think this is also an approach that has been launched by our Commission President von der Leyen in the last 12 months. We have the EU Green Deal, and we want that this Huruma Fund also looks is the right model also in an inclusive way, but also in a way which really protects planet and livelihoods. So I look forward to the proceedings of today, the next 2.5 hours, where we can discuss how can Huruma and also with Bbva Capital and all the partners with the private sector, because I think this is also important, the role of the private sector, of Spanish entrepreneurs to help in this transformation process, because the European Union or the governments on their own can't do everything, especially in the coming years. So good policy dialogue, clear vision at country level, capacity building, hence our role in the technical assistance facility, and also smart public policy making. Many a time there are a lot of policies at public level, but they are not smart. So smart policies, smart public policies accompanied by the expertise of Spanish entrepreneurs and beyond. So I look forward to the proceedings. I look forward to a strong engagement with the Spanish authorities and hopefully also with private foundations in Spain. I know that this is also a growing opportunity in terms of engagement between us as Commission services, COFIDES, but also private foundations in Spain, so that we can truly leverage from a landscape approach. We are not just discussing, I am the head of unit of agri-food systems, but I also want to engage with other parts of the Commission, with other parts of Bbva and other parts of the 9DGs on biodiversity, on climate change. The next 12 months will be very important on the international arena because we have 3 big events. We have the UN Food System Summit, we have the CBD on biodiversity, and we have the COP, so part of the Paris commitment. And if together in the next 12, 18 months we can showcase some early results from Huruma, we can also show that we have development in there for the benefits of the global community. So thanks again, and looking forward to today's proceedings. Over.
Leonard Michi, jefe de la Unidad de Desarrollo Rural, Seguridad
The head of the DG on food security of the European Commission. And to finish this first part, we're going to ask the president of COFIDES to join us on stage whenever you're ready. Thank you very much. Thank you, Secretary of State, for joining us at this, which is your home.
Your introductory speech, and also because you have emphasized very well, I think, the relationship between development, agri-food systems and entrepreneurship, and particularly with making reference to the relevance of Spanish companies related to agri-food systems. Thank you, Professor Collier, for being with us another time. Looking forward to seeing you soon here in Spain. Gracias, José Antonio, por acompañarnos.
Thank you, José Antonio, for joining us. We know that not only are you the Spanish expert on everything related to development cooperation and very significant in the private sector to promote development, we shall continue counting on you for everything in this matter. Carlos, my dear friend Carlos, thank you very much, I feed for your essential contributions in these projects. I would also like to thank all the investment funds, not just Bbva Capital, but all the other impact investing funds joining us at this event today, and obviously also La Caixa. Without their ability to mobilize these resources in the market, it would have been impossible to come up with a fund such as this one, like the Bbva Fund, and I'm sure other funds that are also emerging in Spain. I believe one of the essential elements of the 2030 agenda was to focus the debate on the fact that supporting the resolution of the social problems of humanity, and especially development cooperation, could not be addressed with very active participation of the private sector. Unfortunately, the pandemic that we are currently living in, and forcing us to hide our smiles and the things that we're experiencing in our own countries. They're telling us even more than in the past that we need to all cooperate in the greatest harmony possible to resolve the challenges that we're all facing with regard to development, and in particular development in the continent, which is just a few miles away, but also other further ones away in distance, but not from our heart. I believe it's very important to understand that the new development policy will require joining things that in the past were considered like chalk and cheese, and now that's what institutions are here for. We have to be able to administer the public resources that belong to all of us so that we could provide sufficient incentives so that all the parties believe that the joint benefit is advantageous for all of us. And that's why I believe the Huruma Fund is essential for COFIDES in this regard, because it's a pioneering transaction, it's innovative, I think it's highly relevant for development of the national impact investing ecosystem. This impact investing goes far, far, far beyond philanthropy. We're not going to make it alone with philanthropy. We're mobilizing resources from the private sector who require a fair return, not just speculation, but a fair return, and the support of the public sector to bridge the gaps that require mobilizing these resources. I would also like to highlight two very important points. For us, this project is a milestone. It's a milestone in the sense that we are putting into practice what Leonard mentioned earlier of Team Europe. We are bringing together resources from the European Union to combine them with those of the Spanish Development Cooperation Agency. And we're also doing, which is very often difficult for us to do, which is building a Team Spain. Team Spain for me means, in this case, bringing together institutions with different logics, different dynamics, so that together we can go towards what very often my colleagues hear me say, to overcome the Hispanic-Spanish issues, to try to make sure that projects are successful. So that's why I think this is a very important milestone, and it should act as a model for other future projects. But on the other hand, it's also a milestone because it's been able to mobilize a very significant amount of resources from the private sector. The managers will be giving you the figures later on, but we're talking about over 100 million euro of the private sector. So we're mobilizing these private resources and putting into practice what we're always talking about of public-private partnerships. Thank you very much, Bbva. I know you've worked a lot on this. You've collaborated with the COFIDES teams and the IAC teams. You've worked hard to make sure this is a reality. And to finish, I would like to threaten you or I hope in the future we have more Huruma funds and Bbva projects of this kind or other types, because I think we will always be willing to structure these transactions appropriately and to the advantage of all. So thank you very much.
Presidente, muchísimas gracias. Gracias por...
Very much. Thank you so very much, and thank you for being with us. We are going to begin with academia. Then we will explain how the fund is actually run, and finally we will explain how it is being managed in Spain. So let's go to school. We have with us two very important experts. First, Sir Paul Collier. Thank you so much.
This morning, Mr. Collier. Now, I would like to introduce Sir Paul Collier, professor at the Bbva School of Government. Although for many of you, Mr. Collier doesn't need any introduction, let me highlight just a few of a long list of accomplishments. From 1998 until 2003, he was the director of the Development Research Group of the World Bank. In 2010 and 2011, he was named by Foreign Policy magazine on its list of top global thinkers. He has written for the New York Times, Financial Times, the Wall Street Journal, and the Washington Post. His books, The Bottom Billion and the Future of Capitalism, have become a must-read to anyone interested in development economics. In 2020, he has published his latest work, Greed is Dead, Politics After Individualism. So thank you so much, Mr. Collier, for being here with us this morning.
So, thank you very much indeed. It's an honor and a pleasure to speak at this event, because I believe that the future of partnerships on development for emerging market and really poor economies, that future is really about private sector development. And private sector development essentially means firms and connecting firms with capital. So, I'm all right with you. Can you hear me? Yes. Yes. Okay, can we carry on? Yes.
Yes, perfectly. Are you listening to me?
Yeah, I can hear you.
You can keep on perfectly. We can listen to you perfectly, okay?
Thank you very much. Thank you. So, private sector development in the country, that's the process which makes ordinary people very much more productive than they are working individually. And that's done first through firms, and poor countries are very short of proper firms. That bring people together, there is scale, there is specialization, and those firms connect with capital markets. So that's a vital process. And in poor countries, it's just not happened sufficiently yet. More than ever, now with COVID, that's important. So, what's the problem? Why do we need development finance institutions? Modern economies, like Spain, are full of interdependencies. Each firm depends on other firms. And that poses a huge coordination problem, because in a country which doesn't have enough firms, nobody wants to be the first to form either a cluster or a value chain. And modern economies are all about clusters of firms together or chains of firms in a line, in a value chain. But nobody wants to be the first firm forming a cluster or the first firm forming a value chain, because you might be the last firm, you might be the only firm. So it doesn't become a cluster, it doesn't become a value chain. So the sensible thing for individual firms is to wait. Nobody wants to be first. Nobody wants to be the pioneer. It's the opposite of with technology. With technology, everybody wants to be the pioneer because they can patent the new technology. But with clusters and value chains, nobody wants to be first. There's a pioneer premium. And so there just aren't enough pioneers. Things don't happen. If everybody waits to be the fifth firm in a value chain, there's no value chain. If everybody waits to be the fifth firm in a cluster, there's no cluster. And so that the big advantage of DFIs is that you can put money in which lowers the risk of individual firms, and you coordinate.
Hello, Mr. Brook.
Hello?
Hello, hi, this is Cesar. I'm from the technical team. I'm just checking that everything is okay for your...
It's fine by me, yeah.
Okay.
Sorry, I keep getting messages to... anyway. We need pioneers, and we don't get enough of them without public sector. And that's your role, is to coordinate and encourage firms to go to sectors, new value chains. Now, right now, is it more important than ever? And the COVID hit has hit Latin America and Africa particularly hard, not just because of the direct health impact. The global recession, very macroeconomic hits for both Latin America and Africa, because they're both commodity and commodity prices have crashed. But foreign exchange income across Africa and across Latin America, foreign exchange income has fallen. And so you need other sources of, either you need new exports to expand exports, you need, but Africa, the big story, I think, is going to be reducing imports, because Africa, 40%
Mr. Collier, do you listen to me?
Yeah?
Can you? We are having a little bit problems with the connection, so we are going to connect again, if you don't mind. Okay?
Oh, yeah, do you want me to come off?
Okay, and we are going to keep on with the other teacher, with the other professor, and we are going to repair it. Okay?
Okay, so do I want
Okay,
to leave
in a
George?
few minutes, we will come back with you.
Okay.
Okay. El otro eminente académico que...
Another distinguished speaker with us today is from the Complutense University, José Antonio Alonso. We're going to try to provide a solution to the line issues we have with Sir Paul. José Antonio Alonso is a doctor of economic sciences and full professor of applied economics at the Complutense University. He has worked at the United Nations, at the European Advisory Group, at the Bill and Melinda Gates Foundation. He has published books such as Cooperation in Times of Crisis, and more recently, in 2019, a new face of international cooperation for development. He is a full professor, as I say, José Antonio Alonso. I hope the connection is good. How are you, sir? Welcome. I'd like to thank you for inviting me to participate in this very interesting session. And thank you for your kind words. I hope to be coming through clearly.
Perfectamente, sí.
Pues acompañar este crecimiento con una felicitación.
Begin by saying congratulations. That is a source of satisfaction.
Está haciendo, y yo estoy orgulloso de cómo está haciendo Luis Curvelo las tareas en COFIDES, cómo COFIDES está...
Congratulations to COFIDES. A good friend is at the head of COFIDES, and I have to say that what they are doing with José Luis Curbelo is outstanding, and congratulations also to the other speakers. I would like to share with you 5 ideas or 5 messages which are important, I think, and it has to do with the issue at hand. I prepared a presentation. I don't know whether I can share my slides. I think it would be interesting if you could have my slides as a backdrop to my presentation. It's a PowerPoint which includes my key bullet points. Am I sharing my screen? Perfect. Let me see if I can share. I'm trying to share my screen. I'm having problems. Okay. Well, as I was saying, it's 5 very important messages. First and foremost, the more resources, the better alignment. I think that the international community is aware of the fact that the challenges that are implicit in sustainable development in our world today call for tremendous efforts. They call for transformation. They call for resources. We need, therefore, to take a quantum leap because we need true transformation if we are to successfully take on the challenges implicit in advancing towards the kind of world that we want to live in, which is a more sustainable world. The World Bank talks about trillions, not billions. In order to avail ourselves of those resources, we have to be ambitious in our approach. These resources are very important. And we have to think about how important it is to raise funds. This calls for joint efforts. We have objectives set forth for 2030, and we need to involve and engage all of the parties involved in the raising of funds, and furthermore, in the alignment of our investing efforts. So mobilize resources and align private investment. This approach has to be comprehensive, and it must focus on very important areas. It must be deployed in 4 non-exclusive but complementary areas. Next slide, please. So first and foremost, we need to strengthen the private sector in national markets, in developing markets. We know that we need to join forces in order to further these investment activities in developing countries. Next slide, please. I'm sorry, I don't seem to be able to pass from one page to the next, but the technical team will help me. So private sector for development now also calls for encouraging international investment. This is of the essence if the private sector is to align its objectives with public sector objectives. Next slide, please. We should think about how to better design, more intensely design, the kinds of mechanisms that we need so as to encourage the best possible performance by the private sector. Better standards, better voluntary norms. Now, where these 4 work areas actually coincide, we have the core, if you will. This is where we would improve behaviors, ensure better performance, avail ourselves of the necessary financial instruments. So the second message then is that we need to creatively explore hybrid mechanisms for private-public partnership. Creatively, this is very important because these mechanisms will ensure the best possible results. We know that Anil Karnani addresses the issue of fighting poverty together. Investors expect to earn more than the cost of capital, and philanthropists expect to earn less than the cost of capital. This is important. When we think about 2030 goals, we have to bear in mind that there have been other crises that have been overcome. It's not good to turn back in the face of obstacles. What we nearly do is preserve the borders, but overcome them. And there are many activities in which different actors are complementary and help each other out mutually. And here we would think about SDG goals. And it is this space that you see here. You see that yellow tranche, which talks about domestic enabling environment and policy framework. That would be the umbrella, but it's the sources. Hard work carried out by the private and public sectors. Next slide. Thank you. A third great idea, and the fourth message, is that this is a field in progress. We see increasing consolidation. We see increasing international support. Foundations, the G8 and the G20. We see different agencies. We see NGOs. And we see specialized platforms. And different reports are absolutely essential. One of the specialized platforms which is of tremendous relevance is, of course, the OECD with its Social Impact Investing Initiative. But this ecosystem, this institutional ecosystem, has been broadened with the involvement of the multilateral entities. Impact reporting and investment standards are important, and this complex structure allows us to conjoin the demand and supply sides. There is innovative capacity. We do have models in place that call for pay for success, and there are increasing initiatives in the field. The basic characteristics of impact investment is the fact that it's not only financial resources, it's also an entrepreneurial mindset, innovation, looking at new ways of responding and reacting to the kinds of challenges that we face now. We know that there is a challenge, and it is, I believe, a major one. We need to be able to measure impact. We need to be able to think about the best possible metrics, the best possible processes, so that initiatives be transparent, reliable, comparable, and of course, accountability is very important. We want to ensure that these theories are measured. What is a defining element here is being able to determine its impact while we gauge the profits involved. These initiatives in the field have us resting on this triple level: assessing measurability and impact. The private sector has generated the necessary tools for the measuring methodologies, but impact in general needs to be assessed. Some of these initiatives to best measure the impact are the OECD Social Impact Investing Initiative, the Social Impact Investment Task Force, the Global Impact Investing Rating System. It's essential to have access to these tools. Unfortunately, we've lost audio. We're being told that at home everything is running very smoothly, but we're having issues here. Sir, can you hear me, Professor? We don't have audio here. I'm not sure whether there's... Oh, good, thank you. Please continue. We're being told by our audience that everything flows smoothly, but we have problems here in the auditorium. We have problems in the auditorium. Yes, please do continue, sir. I would need to add that apart from these social impact investment, there's numbers that allow us to understand that the market is growing rapidly. This has to do with having access to comparable data. Sir, I'm sorry, but this is a very choppy connection. We're being told that this is your phone line, I'm sorry, we will try to continue. I'm being told that we have Sir Paul Collier. Sir, we're going to try to return. Can you hear us, sir?
Are you listening to us, Mr. Collier?
Can you hear us, sir?
Okay. Connectivity. I think that the problem with the connectivity is solved, so you can keep on where you want.
So do you want me to start now?
Yeah, sorry.
Right. Okay.
Sorry,
Okay.
when you want.
Off we go. Thank you. Well, this is typical of very many of these e-connections. They work when they work, but in my experience, none of these is complete without something going wrong. So, just to remind you where we were, it's getting out of poverty, or more generally, catching up with the advanced economies, is really about raising productivity of the ordinary worker. And if ordinary workers work just in solo or in micro-enterprise with no connections to proper firms, they're doomed to poverty. And so the secret of crawling out of, basically of catching up with the advanced economies is about firms connecting workers so that they can get deep economies of scale, economies of specialization, and plug into markets. And what firms themselves offer is connections with each other and connections with capital markets, especially. It's the connections with capital markets that allow everything to grow. So DFIs are the public sector's connection with firms and markets and capital markets. And why is that essential? Why do we need that public sector connection? Because there's a huge coordination problem that firms face in breaking into a new sector. Nobody wants to be first. Modern economies are all about interdependence between firms. Firms are interdependent in a cluster, they cluster together, or they're interdependent in a chain of value, one thing adding value to the next. And so nobody wants to be the first in a cluster or the first in a value chain, because you might be the only one in that cluster. It might not become a cluster, or it might not become a value chain. And so everybody, very sensibly, individual firms wait. There's a penalty to taking the risk of being a pioneer. It's the opposite of with technology. Everybody wants to be the first in technology. That's innovation in an advanced economy. But catching up is not really about innovation. It's about forming these clusters and these chains. There's a penalty on being first. So there aren't enough pioneers. Development finance institutions can encourage that pioneering by providing the public money which lowers the risks and which coordinates firms together and links up with governments in Africa and Latin America. And so it just makes the whole process of breaking in so much easier. Now that's even more important now than it was before COVID, because COVID has hit the emerging market and the poor economies very hard. The macro hit to the emerging market and poor economies has been much more severe than the macro hit to the advanced economies. And yet the amount of public money provided to help is the opposite. It's been something like 20% of GDP used to help firms in the advanced economies. something like 7% of GDP in the emerging markets and something like 2% in the really poor economies of Africa. So we've got it back to front. The countries that need more help have had less. Development finance institutions are vital in two senses. One, you can protect the scarce private sector organizational capital already in Africa, and to some extent it's scarce also in Latin America. And I want to now turn in particular to agriculture and why this fund you've got to help agriculture is now so much more important than it was even before COVID. If we look at Africa, Africa imports something around 40% of its food, and yet it's got a huge amount of workforce, a huge amount of land, a lot of rainfall. It should be growing food and exporting it. Why is that not happening? Because the farmers are not linked into either the markets to sell their produce abroad, or the organizations that can process that food, brand it, market it, and so there's a huge scope for expansion, both that provide the marketing for small farmers and for firms that provide the agro-processing and brand for small farmers. That is the big opportunity provided by COVID. Africa in particular is very short of foreign exchange because of the fall in commodity prices. Latin America's had the same hit. Both Latin America and Africa are commodity exporters, and the price of those commodities has collapsed. So they're short of foreign exchange. Latin America can expand its exports of agriculture. Africa can reduce its imports of agriculture. And so this fund is absolutely the right thing at the right time. Finally, turning to impact, there is a huge increase in attention in the financial community, partly under pressure from ordinary citizens to say, we want our money used more ethically. We want to see that it's providing public benefits as well as private gain. And that's the business now of starting to measure the impact. And in the case of agriculture amongst small farmers, actually measuring impact is not that complicated because the impact, the benefits are huge. We're benefiting some of the poorest people in the world, and we can have quite dramatic impacts on their productivity. Once you brand food, you process it, you reduce harvest to mouth losses in the food chain, you provide massive increases in productivity for rather little expenditures. And so the properly measured, the impact here is huge. There's a great danger with measuring impact, that it becomes a sham, or that it becomes dominated by things like carbon emissions. Africa is not a problem in carbon emissions. What Africa's problem is people are very poor. And so what we should be measuring of impact in all this is the impact on lifting people out of poverty by raising their productivity. That is starting to happen. As it happens, there are a huge pool of pension funds, both in Europe and in North America, waiting for vehicles that can actually measure the impact. So, on that note, I'm going to conclude. I'm going to congratulate you on doing this and encouraging impact investors around the world to join in, and also, finally, encouraging the other development finance institutions around Europe. Europe has a large number of development finance institutions. It's very sensible that they should all coordinate together around this new process of plugging into capital markets so that the DFIs themselves can be really scaled up. The future is funds run by DFIs that attract investment from ethical investors. Thank you very much indeed. And I apologise for if I contributed to the technical glitches, but I think it was apparently more on your side than mine.
Don't worry, everything has been great. Mr. Sir Paul Collier, thank you so much for being this morning with us. Bueno, esta ha sido la primera parte.
That was the first part, the more academic part. We apologize for all the technical issues there have been. We're now going to focus on how this fund actually works. What is the spirit that lies behind all of this, Mr. President and Secretary of State? Thank you so much for having been with us. What we're going to talk about now is how to support access to funding by small farm holders in developing economies. The Bbva Capital, the Huruma Fund managers, are going to be describing the scope, the innovative aspect of this fund, and the public-private partnership. They're with us here today, Agustín Vitórica and
Perfecto, cuando queráis.
ready. Thank you very much. First thing we want to do is thank COFIDES, the organizers of this event.
Una alegría especial realmente estar hoy aquí.
Absolutely delighted to be here today with all the previous speakers, and we also want to thank COFIDES for all the support they've given us over the past few years to launch the Huruma Fund, and also all the support for impact investing in general through this new movement. We've prepared a presentation that we'd like to share with you on how this Huruma Fund actually works. Can we please show these slides on the screen? Thank you very much. First of all, just to give you some very quick figures about Bbva Capital. Who are we? Who are Luca and I? We're just two people, two friends, who came together 10 years ago with a joint mission. There are lots of different figures here. I'm going to go very quickly over them. The first thing I want to say is the main player of this, creator of this, is my colleague Luca, but I will just give you some figures. We've mobilized 196 million euro already in 4 impact investing funds launched, where over 80% of that money is private equity. And I'd like to highlight the importance of the need to mobilize private funds. We've already conducted 31 impact investing projects in 15 countries around the world, and we've already disinvested in 16 of them. And all of our investments have generated a positive financial return, debunking the myth that you either go for impact investing or return, which is absolutely wrong. You can have both. You can have impact and return at the same level. These entities where we've invested have already benefited 6.9 million people, and the Bbva's investments have had a direct impact on 213,000 families. Huge impact in different areas: Africa, Latin America, and Asia. 84% of the beneficiaries are women, so there's a very strong gender issue here. So we're empowering women with these funds, and 54% of the beneficiaries are rural. Luca, would you like to talk about the returns? I'm sorry, his microphone is not on. Microphone is not on. We need, I think, microphone, please. What surprised us most is that the social impact has also been 0.8 over 10, and we'll talk later on about how we score the social impact. Microphone, please. Going back into the origin of Huruma. Over the last 10 years, we launched, prior to Huruma, 3 other funds. These 3 funds were going to resolve a very clear social challenge, which was financial inclusion. But generically, what we have done is supported small entrepreneurs in any segment or business activity. We've also conducted investments to fund SMEs, which is also a key element for growth for these developing countries. We've also invested in education, especially for small affordable schools. And we've done this with these 3 funds, the Bbva, Fund, and GFFI, and recently with Magallanes Impacto, which is a collaboration with the manager, Magallanes Value Investor. And listening to the previous speakers, this is all about alliances, of course. But next, we've wanted to go to very specific segments, and I'll let Luca discuss this, which is of particular interest. What we actually realized is, I always use this metaphor, but what we did as a development sector in the last 20 years, and there are many people in this room who have contributed to this, we have built the roads, so to speak, for financial inclusion, so that we have all the infrastructures. What we realized, as Agustin so well said, is that these roads now, with Huruma, are striving to solve a very specific problem. We realize that smallholder farmers were a segment that still, and we'll show you figures about this, they were absolutely not yet being served. Microfinancing organizations were not serving them yet. So we decided through this road to build a small, narrow road that would go into this segment, which is actually a huge segment. We're talking about thousands of millions of people. Most of the poor people in developing countries are farmers. And that's absolutely what gave rise to the idea of the Huruma Fund, to try to resolve a problem that was very, very specific.
Bien, bueno, pues hablemos ahora de.
I'm going to talk about the first commitment that we assumed with COFIDES and the European Union to mobilize private equity. As you know, the 2030 agenda is impossible without the very strong mobilization of the private sector and private investors. And this has been possible thanks to the combined or blended financing structure. This is the first one so far, and we hope there are many more, but this is the first one that has been organized and spined with blended financing, combining public and private capital. On the left, you could see how this is structured. There are 10 million for losses managed by COFIDES with resources from the European Commission, and these will allow providing guarantees for private investors so that if things go pear-shaped, they'll be able to recover their investment. It's also very important to look at the cooperation of Spanish entities through Fonprode. There are 20 million of junior debt that has a return of 2.5. So that private investors with these investments will join at a time when, if things don't go well, they'll maintain their capital, and the Spanish agency allows them to increase their return so that investing in something that has such a high impact, such as Huruma, will be financially attractive for private investors. All of this is further reinforced, especially the impact, by €8 million, almost 9 million of a TAF, a technical assistance facility provided by the European Commission for the transformation that Luca is going to be explaining in detail now. And also, I'll let Luca now describe what kind of investors we've attracted, and in particular, I'd like to thank on Luca's behalf and my behalf and everyone at Bbva Capital for the partnership with CaixaBank Private Banking. We'll be hearing from them later on to mobilize all of these resources, and also other wealth managers who have also helped us. So, you could see this in the pie chart. Most have been of the private sector have been network individuals who have been attracted primarily by CaixaBank, really. And then there have been many private institutions, and we're talking about large pension funds here and large insurance companies, so institutions who often, and in many cases, it was the first time they'd heard about impact investing, and in some cases, and this pie chart showing here, it was the first time they were investing in alternative investments, so to speak. So I think one of the key messages of this slide here is that it's true. We've attracted a good part of private investors. We're talking about a leverage of 1 to 3, so that's excellent leverage. Even more so, because with 10 million for the initial losses and 20 of junior debt, we have achieved these 30 millions, but it's also a matter of education. We've brought to the table investors who had never before had invested in impact investing. So really, it's been an absolute pleasure. I want to go all over the country with Agustin and Caixa to be able to present this new kind of assets, this new way of thinking, really, on how to invest your money. And I want to present this to people who've never heard of this before and see how some people can get really excited about this, because it's a beautiful matter, isn't it?
Sí, entonces sigo yo brevemente.
Okay, I'll continue. So, just to give you an outline of how Huruma started, and Agustin talked a little bit about this earlier. We realized two things, actually. First, that there was a clear lack of access to funding for smallholder farmers, and there was a huge demand. So farmers, by definition, need money to buy the commodities they need for their fields and their crops. And the second thing we discovered was that there were a lot of microfinancing institutions that were located in rural areas, that had offices in rural areas, but they were not ready to provide services to smallholder farmers. So our objective we set was, how could we help these thousands of millions of smallholder farmers could access financing through microfinancing institutions? And the only way to do it was to transform these microfinancing institutions so that they could adapt their business model to these smallholder farmers. And you can see this in particular on the slide. We realized that for the whole portfolio that we invested in the past, approximately 2/3 of all the previous investments, 2/3 of these investments were in rural areas, but only 17% of them had a business model that was completely adapted for smallholder farmers. Over 50% were in rural areas, but they had nothing really adapted. They were not offering loans, customized loans for these smallholder farmers. They had products and processes that were missing, because agriculture needs very specific risk models and also people. trained people. So we needed training so that these loan instruments were better adapted to agriculture. And adding on to what Lucas is saying, I'd like to talk about two specific projects, two investments that have already been approved by our investment committee. One called FACES and another entity called Insotec in Ecuador. In FACES, for example, and that's the strength of this technical assistance. What we're going to be doing in FACES with this European Commission facility is to establish, implement, and coordinate with the information system management of the entity a prevention and mitigation instrument for agricultural risk. This means that the entity is going to be able to know which products in which different areas are being financed and to introduce climate information so that if there are any possible future shocks, they'll be able to react to them. This is essential. It's essential to be able to serve these small producers in a way that is sustainable over time. If you only fund one product and something happens to that product, the whole financial entity will collapse. And another project, and I think we're going to be listening to the general manager of Insotec, it's really interesting because it's related to what Sir Collier said earlier. It's the possibility of enabling access to financing to, for example, there are some investments for single products, for example, corn producers or maize producers, and then they connect them to a cooperative that commits to buying their corn or maize at a specific price. So they provide then quality seeds and fertilizers that allows these farmers to produce the necessary maize and to compensate them for buying this kit of initial products. Pronaca pays Insotec money to fund these small producers at a very low interest rate, and this helps them have their product bought by an entity as large as Pronaca, which then produces fabulous corn or maize products which they sell through all the small shops or supermarkets throughout Ecuador. So this transformation process is essential to make sure that the social impact remains after we come out of this investment so that we can perpetuate the impact over time. And the last thing we want to say about this, the transformation that we're trying to achieve, and this is really important, it's based on two different pillars. So number one is the scope. We want to make sure that we reach the greatest number of smallholder farmers as possible, but it's important to look at quality. The products offered to these farmers should be very high quality. So I think these two examples that Agustin has given fit in perfectly with these two priorities. Since we started with Agustin 10 years ago, I think we've left our old jobs behind with the idea of working on social impact. We really wanted to change our lives. We were both working previously on purely financial matters, and now social impact has always been, and it still is, extremely important for the two of us. So we've developed the 4 principles for Huruma that we're applying to all our funds to maximize the social impact and transparency, as the previous speakers have mentioned as well. The first one, and I think we've already just mentioned this in the previous slide, the idea of identifying a social problem, a gap in the market, that could be addressed by the private sector. This is key for us. The idea of building a fund that invests in things that are for the good. We don't just want that. We believe that to maximize social impact, you need to focus on a segment that's large enough so that there'll be loads of investments, but it needs to be focused enough to maximize its social impact. And in this case, Huruma is very clear. That's exactly what it's doing, and we're both obsessed with this. And the second point is, we've been talking a lot about measuring social impact. That's absolutely essential. If you don't measure something, you don't know what we're talking about. But measuring is not enough. We're talking about managing the social impact, where actually measurement is done to improve things so that tomorrow's impact is even greater than today's impact. Now is not the time to get into details about this, but we want to build a series of mechanisms and instruments so that all of our investment processes have feedback, and we learn from what we're doing, and then it's further implemented so that microfinancing institutions also have incentives to improve. And I'll give you just an example. We have mechanisms whereby if a microfinancing institution implements excellent matters related to social impact, then they can have a lower interest rate. So this will be an incentive for them. And these are very innovative instruments that we hope to implement with the Huruma Fund. And the last 2 points are absolutely essential, and I'm going to go over them very quickly because I'm afraid we've run out of time. But what we also do is we audit the social impact. Investors can pick an independent auditor who goes to the field to verify the impact metrics. And the audited score is what determines our success. Without a financial incentive for this impact, a lot of investors would say, yeah, well, that's what you're saying, but now we'll audit it, and it is validated with the same rigor as financial return. And we really want to thank COFIDES for this, because they were essential since the second fund that they joined. They said that we had to have these kind of incentives aligned with the audited fund. And we'd like to finish with this last slide, which gives you 2 important figures. Number 1 is the reach of 125,000 smallholder farmers that are going to be reached by Huruma. Of these, 45,000 producers living in extreme poverty are going to be able to come out of poverty thanks to Huruma. Luca, would you like to add anything? Yes, as Sir Paul Collier has said, productivity is essential here. The impact we're going to achieve, the people who are going to come out of poverty will be able to do so because they're going to have financing to buy better products, and therefore they're going to be more productive. There are academic studies, I'm not going to go into detail, but they absolutely verify this, that if there are smallholder farmers that have access to financing, they can increase the yield of their crops between 50 and 100%, and consequently support the 2 sustainable development goals, number 1, which is to eradicate poverty, and number 2, which is to end hunger. So once again, we want to thank all of you for the support you've given us in the past few years, and we really want to highlight that it's still a very long journey ahead of us. We have a lot of issues to resolve yet. Thank you very much. Thank you so much for having explained this. I'm afraid we're running out of time, but Agustin Vitorica and Luca Torres, thank you very much. We also want to highlight the contribution of the European Commission and what their support has meant for this initiative. We're going to be listening to Matthew Brook from the European Commission.
In this event this morning. Good morning, hello.
Hello.
Hello. Can you listen to me?
I listen.
Okay.
I can hear you. Yeah.
When you want. Welcome.
I'm hoping you can hear me. I'm having a relatively hard time with the sound. So if there's a problem, please let me know. So my name is Matthew Brook. I work in the same team as Leonard Mick, who spoke earlier, where I in particular follow the various initiatives you have in order to promote agriculture as a motor of growth. So I think in the first instance I should underline that of course we're delighted to be here. This is an extremely interesting opportunity we've been given in collaboration with COFIDES, and we're very pleased and looking forward to the positive results I think we all want to see come out of it. I will spend the next 10 minutes, I hope, simply giving you an outline of where the EU has come from in this investment and why we're so interested in this particular deal. I will try not to repeat the design of the Huruma Fund. I think the experts have spoken and they've given you a good picture. So I think for us, the essential background to this sort of engagement, where we use our EU development assistance, so public funds, in conjunction with private sector, is of course the recognition of the private sector. As has already been said, the private sector has a fundamental role to play in promoting development. But it is of course difficult to put into practice a combination of public funds and private funds. How do you work with private companies? And I think in 2014, looking back a few years now, we finally put onto paper, in the form of an EU communication, guidance or strategic approach to dealing with private sector. And that allowed us to move ahead in a more concrete manner, including, of course, with agriculture, which is, as you all know, the dominant sector of employment, at least, and also the main area where poverty is obviously in evidence. It allowed us to advance, but it also allowed us to say clearly we need to adopt safeguards when working with the private sector directly. And that means when we put public money into the sort of collaborations with private sector, that public money has to be additional. It cannot be replacing what the private sector is currently already doing. There cannot be a crowding out effect. We cannot be distorting local markets by pricing unrealistically. We cannot be confusing local market signals or undermining existing activities. But of course, we have a strong attachment to, as has already been stated, a development impact, which is clear and which is measured. And I think we are making similar signals to the other participants so far. Our approach to promoting private sector is slightly broader than just making available capital. I think we've underlined already the importance of a conducive enabling framework. I think two key angles to that is, of course, the fact that you need to work with a local public sector to ensure a conducive investment framework for the private sector. So private sector alone is inadequate, but the private sector needs to come in to the work we collectively need to work and achieve, which is in terms of establishing a dialogue around the rules, regulations, the market access type of stuff, where public dialogue is necessary, but the private sector should join that dialogue, and the private sector will benefit the dialogue and will subsequently benefit from the dialogue and the reforms that are introduced. And the other angle, of course, to bear in mind is that the public sector also spends public resources on things like infrastructure, which clearly are an essential component of enabling environments. And so the public sector really does establish the basis for private sector investment subsequently. And I think the newer angle of our interventions these days is, of course, attempting to promote improved access to finance, which is clearly recognized to be inadequate. We know very well that small farmers are finding it extremely difficult to access finance for the investments they would like to carry out. And that is where the blended finance instruments we have, where we really combine public resources with private or with other sources, such as COFIDES, and subsequently private investors as well, are being emphasized far more, and attempting to address some of the obstacles to greater private sector investments. Now, when we do this, we never invest directly as European Commission. We work in close collaboration with our European development finance institutions. So COFIDES is a perfect example, and COFIDES is the conduit for an investment that we are making in Huruma Fund. I think we have to recognize at the outset, and it's worth stating it, that the agricultural investments, especially those looking at smallholder farmers where we hope to engage, are difficult. It has been slower than we all hoped. I don't want to be negative today, but I think it's worth underlining that we have clearly noted that the risk-adjusted returns to investing in smallholder agriculture are relatively low. They're lower than in other sectors. And it's related to the inherent characteristics of the sector. Returns are not particularly high, risk is high, and the costs of sourcing suitable investment deals are significant because you have to go into the countryside, you have to find suitable counterparts who are ready for investment. But it is clear that the development impact that you can hope to achieve by working with smallholder farmers and their investments is higher than you might achieve in other sectors. So we are determined to persist. We're looking to increase our activities in the future in this area. And that brings me to our investment in Huruma. As I say, we're delighted to work together. I think you could summarize it by saying we're delighted to work together because there's a clear alignment of vision here. So what's been presented today in terms of Huruma Fund very much meets what I just discussed above. I could briefly highlight the three aspects that I think are essential for the Huruma Fund. One is, of course, its objective of funding what people describe as the missing middle, but looking at small ticket sizes, small investments serving the smaller farmer. And we're convinced that the smaller farmer can be or can become a viable investment prospect. But it is clear that this is a risky market, and that is why making a first loss contribution is so important, because it reassures the other investors that they can maybe enter this market, and it de-risks the overall deal being proposed to them. And that is how we hope to bring this activity to scale, by bringing in other investors who have far more funds than we have, but we provide a degree of reassurance. The second key point, I think, was well underlined by Luca and the other colleagues, is of course the need for significant technical assistance to accompany the investments. And that allows you, on the one side, to reduce economic and social or environmental and social risks. It allows you to ensure those are adequately addressed. It also allows you to develop your market a bit further. And this is clear. We need to continue developing the market upstream. Technical assistance can contribute to that. I think we have to recognize also that far more needs to be done in that area of developing the upstream market, so that investment demand that is credible and is in a position to propose a sound business plan, is in a position to repay the funds that it is being provided with, that these sort of investments and these sort of companies do thrive. And that's where the enabling framework comes in, and that's also where the wider development work on sustainable value chains, I think, is essential. And that's why we try to link up the provision of capital with the wider work where we're promoting sustainable value chains. And the third and final point I wanted to make on this is the central role of measurable impact and development results, featuring heavily amongst that development impact and those measurable indicators. And that is very clear and very central in the Huruma Fund, so we very much look forward to working with them. If I have time in my 10 minutes, I'm not quite sure where I stand, I could add 2 or 3 lines on the future, where we see, obviously, we have the big orientations, which I think Leonard already touched upon at the beginning, where sustainability, addressing climate change, and sustainable food systems have all been given a far higher profile than in the past. This is good. Equally, investment and engaging with the private sector are given a higher profile than in the past. So blended finance instruments will continue, they will expand, and I think there is large and very interesting space for extending the work we do together. I think we want to engage more with our development finance institutions, our European counterparts, to bring together the experience that we already have established, to follow what is going on, and maybe to bring together our resources and try to set up more responsive and more flexible tools that allow us to meet the demand that is evident for investment capital in our developing countries. And on our side, I think we have a strong call also for strengthening the dialogue mechanisms within each country in order to address a lot of the local obstacles to investment, which are not just capital, but clearly other elements too, such as improving the enabling framework to allow companies to get on with their business. And I think on that, I've probably spoken enough, and I thank you very much.
Matthew Brook, de la Comisión Europea, muchísimas gracias por estar acompañándonos también esta mañana.
So very much, sir, for being with us this morning. Please don't leave us. And I would like to remind you that we're talking about the Huruma Fund via streaming. Please send us your questions or comments via the chat. We have microphones if those of us who are here in real life want to share their thoughts. And also, we've invited now a microfunding entity which potentially is going to benefit. This is Insotec from Ecuador. They want to contribute to the development of micro companies via the concession of these loans, these credits. They're going to be focusing on very important issues: sustainability, accountability, social responsibility. This is a 10-minute long video. This is Carlos Andres Olguin from Insotec. Good morning. Good morning to all of you who are with us, and hello, especially a warm hello for my co-panelists. I'd like to talk a little bit about Insotec with you. We are located in Ecuador. We provide funding for farmers in rural areas, and we avail ourselves of the value chain. This year, Insotec turned 40. We've been working for 4 decades. We have 21 branches in Ecuador, in the Andean region. Those are those mountains that you must be familiar with, and also on the coast, because Ecuador has access to the sea. It is not landlocked, and we have that important reality in Ecuador. At this point, our portfolio is of $66 million and over 18,000 customers, half on the coast, half in the mountain. There are diverse products, and we have worked jointly with them to build very interesting schemes in order to guarantee that they have access to money and that they be in a position, furthermore, to have guaranteed productivity and guaranteed reach to their markets. We've been working hard for the past few years, and I'll give you some examples now. We are on the market. We are Bbva international, that's our rating. So Bbva plus, that's our international rating. Our local rating is AAA. We have an NGO license, and that's the most that we can aspire to. We have some certifications, the IADB for governance for financial inclusion, and smart GIIRS and smart campaigns. We've been working along those lines for the past 2 years now. So it's a long story. As I say, we are 40 years old, and we can talk about the first 20 years. Basically, it was territorial development. We built associations of local entrepreneurs, and then another 20 years focusing on credit, on loans, on inclusion. So we are market leaders. We pave the way for others, and there is a need, of course, in our market, such a tremendous need that we don't really compete. We actually collaborate in our markets. We help our customers. What you see on this slide is how Insotec has broken down its areas of work. Our rural portfolio represents 71%, and 55% specifically targets agriculture, farming. And of course, in these rural areas, we perform other activities. Trade. We fund many producers of goods and services that are necessary in our territories, and foodstuffs, beverages, always for rural areas. We have a historical portfolio in a city called Collier, where we also provide funding for small manufacturers. We've been working with them for many, many years now. But our approach is essentially one that looks at food and farming. This is the beginning of the year. As I say, here we are ringing the bell, and that's Dr. Danusin, who is our CEO, our founder of Insotec, actually. There we are. And of course, the maximum authority of the Quito Stock Exchange. You can see that there's AAAs, BBBs, GIRS, JIF, GIIRS, BBB+, MIX, all of these certificates, and of course GIF, governance. This is something that we renew on a yearly basis. It is a success. Ecuador is an agro country. Ecuador has water, it has light and water, 2 harvests a year, when other countries achieve a maximum of once. The weather is good for us, so what we're doing is we're growing production and we're helping thousands of small farmers who need money, who need the kind of tools that are essential to improve productivity and the kind of instruments whereby to access markets. I also would like to say that we don't only focus on profitability. We are keen to have excellent ratings. Of course, we're focused on financial risk and so on, but there's more to us. We're working in very poor parts of the country with vulnerable customers, which makes us understand that we are important differently. 64% of our customers, as I say, 64% are customers who have perhaps only completed grade school. There are some rural schools, 90%, and 4% are illiterate, but they're experts in their field. It's incredible to see how they have not had classroom education, no book learning, but they know all about agro. They know their farming. And we have a very important presence also in neighborhoods and parts of the country that are deemed to be poor. Well, we're working with the people who work in those neighborhoods. These neighborhoods see a concentration of poverty in more rural areas, but productive agriculture, the kind of farming activity that guarantees an access to the market, allows them to leave poverty behind, which is why we believe that social performance is very important. Our work truly matters. We have a number of programs. In national terms, we have, say, medical sessions. On the left-hand side, you can see a medical session. We have doctors on the road, and we help not only our customers, but also their parents or their children. We work with the people in the community who need medical assistance. This is something that our clients truly appreciate. We also have another program which provides free medical service and the delivery of medication. This is something which is very important for our clients as well. We can see some images. These are shots of the Andes. This is over 2,500 meters, and farming happens. There's no snow here. Snow actually only happens beyond 4,000 meters. Productivity is wonderful. Potatoes, beans, a series of Andean products, carrots, onions, and fruit, apples, pears, peaches, and cattle also. We have in the middle picture a cow. They have dairy products, they specialize in dairy, but a little bit of farming on the side. Or farmers who also have maybe a small herd on the side. And on the left-hand side, you see a fruit farmer, also up in the Andes. These are images that we see on the coast with cacao, with tropical fruit, very typical of our country, and also cattle. cattle is all over the country. So this is, in a nutshell, what we wanted to share with you. This is Insotech, 40 years, the recent 20 working hard to guarantee social inclusion, and now focusing especially on value chains. We have discovered on the ground, working with the farmers, that if progress is to be achieved, we need two elements. First, the farmer needs to be competitive, and second, the farmer needs to have access to health care. Health matters. I'm going to talk about health first because basically farmers fall under when they don't have a doctor, when they don't have medication to provide health care for themselves or their relatives. We have a network of doctors. This is a national network who help our customers thanks to our alliance. So healthcare is guaranteed. Even serious ailments. This is important. Insotech is doing this. And then if we talk about competitiveness, there's two issues that needs to be taken into account. Let's talk about productivity. They have access to technical expertise. So their acres, or their 3 acres, their 10 acres, can be more productive. And secondly, this is very important, selling at a fair price. A lot of traders would want to take advantage of the farmer, but what we do is we link the farmer with the major exporting company, the dairy company, the fruit exporters, the meat exporters. Before they sow, they actually have sold their harvest at a fair price. So we, as financiers, ensure that this money was put to good use, the animals, the farmland, tools to improve productivity, and at the end, there is guaranteed sale of the products in question. All of this can be done thanks to the tremendous support we receive from 21 international funding companies. Insotech works with North Americans from the US and from Canada. We work with the Swiss, the Dutch, the German, and we work with Bbva Capital. We have an outstanding relationship with Bbva Capital. I have to say that Insotech really is very careful whom it works with in funding terms. We need to know that we share values. We need to be certain that what we want is the same. In other words, raise capital for profitable activities that do have a real impact on the lives of the customers in question. This, of course, has implications, and this is why we measure the impact that we have on our portfolio. And that's what we've seen when working with Bbva. Now we're working with Huruma also, and this is going to allow us to provide funding to thousands of families. Thanks to these small loans on the coast, they're going to have access to capital for their cacao. They use this money to mine their fields, and when the time comes to harvest, sell. It's very important that post-harvesting be carried out very carefully. They need specialized manpower, and they need the kind of machinery that allows them to dry the beans, and well, the post-harvesting session is very important. So we're going to be working with Huruma and the dairy value chain. We have thousands of small cattle owners who need machinery for milking purposes in order to improve that process. In their case, it's always manual initially, and the quality of the milk, the productivity per animal is much less. If you have mechanical milking machines, you can generate many more liters per cow and better quality milk, and you can actually access major dairies. In the case of cattle, we have an agreement with El Ordeño, a local dairy. They manufacture milk and yogurt, and well, they process dairy products. We talked about the cacao beans. A lot of that is exported to Europe, where people love Ecuadorian cocoa because its granularity, its organoleptic qualities, and also because of the story underlying. In the Andean areas, we're also working with potato farmers. They sell their products in those value chains. They export to the US and to European markets. They have special potatoes. I don't know whether you know that the potato actually originated in the Andes, especially from Ecuador and Peru. In the case of our producers, they have a variety which is very Ecuadorian, very local, which has very, very high productivity levels, antioxidants, and all kinds of advantages in medical terms for the consumer. So thank you to Huruma, thank you, Bbva, because they are very selective, they're very, very thorough in their due diligence. Bbva Capital has been working with Isotec, and the due diligence process has been very detailed. There's no doubt in my mind that this is a company that carefully analyzes the institutional elements. They study the fields, they study the grounds, they study the work, they study the clients, and they verify that these value chains are valuable. And we're proud of this. We're proud of it because we know that we work with companies that share our commitment. What we all want is to see our customers progress and prosper, because their prosperity is our prosperity. It's a guarantee for us and for our funding partners. It is an impact. We hope, all of us, to have a very long-term relationship with Bbva Capital, with Fondo Huruma. Congratulations for your hard work. And I hope that what we do is inspirational to you, so that we all together can continue to grow and make resources available to this resource, which is in such dire need. We're a very open company, we're easy to follow, and we want to continue to grow together. We want to have, as I say, these long-term relationships. And I repeat that the values we share are very important. Thank you.
Carlos Andrés Holguín from Insotec from Ecuador. Thank you very much. We're starting to get some questions from the audience here, others online, for the managers of Bbva Capital. I'll ask you one of them because then we're going to move directly to the next roundtable question. What are the main challenges for the entities that are acting as intermediaries with the smallholder farmers in this crisis scenario caused by the pandemic? Excellent question from the audience. There are some very significant challenges. In the end, in all of these countries, there have been holiday payments or payment holidays, such as in Ecuador. It has affected a lot of customers or clients. And what these payment holidays, what they've done is they've achieved forbearances for the payments that were due by these smallholder farmers, and they've given them time to recover. After the state of emergency was declared, we've seen that these clients are extraordinarily good at repaying their debts, and Insotec has already recovered 98% of its loans, so it's gone back to the levels prior to the pandemic. For Insotec itself, and not just its clients, all of these entities have had problems. They've had liquidity problems, not solvency, but liquidity has had to be managed very carefully, and Insotec has emphasized to continue paying regularly and in a timely manner all its funders, so that they can guarantee future funds. And obviously, except for given essential staff and branches, they've been working remotely. So in the end, this has also been a very big challenge. Fortunately, in Ecuador, after the significant lockdown between March and September, now Insotec is working as they did in the past, and they've fully recovered. But it's been quite a challenge. I'd like to add something. We've just returned from Ecuador where we've conducted this due diligence, and we've had the opportunity to talk to lots of small farmers, and there's no doubt that farmer clients are very resilient. They're very used to having lots of different problems, and they've survived. They've done much better than other more urban clients. But it also depends a lot on the kind of value chain that the farmers included in. If it's a very structured value chain, they haven't had a lot of problems. But other value chains that depend more on, for example, fresh produce. For example, in Ecuador, when we talk about avocados, once you harvest the avocados, they have to go to market very quickly because otherwise they'll rot immediately. So some value chains have suffered more than others. But I think in general, they're proving once again how poor people, and farmers in particular, are an extremely resilient market to crisis. Second question from the audience to start the second part of this morning's session. Who do you want to ask a question to? Well, either one of them can answer. Can you hear me? Yes? Either one of you. As you know, microfinancing is characterized by short-term loans, small amounts, and yet agriculture needs another kind of financing. Even small farms in developing countries need longer-term loans and longer cycles. How does the Huruma Fund think about changing this? How are microfinancing entities going to have products adapted to smallhold farmers, and they do it in a sustainable and profitable way? As I was saying, this is going to be requiring transformation. This is a key word for us, and it's going to be based on two pillars. Number one is the scope. The more people we reach, the better, of course. There's a lot of lack of access. And the second part is the quality of the product, and this goes directly to what you're saying, Beatriz. It's absolutely essential. The cash flow for microfinancing is basically for shop owners, where you have cash flow on a daily basis, whereas farmers work in a very different way. They have to buy the seeds today, and they're going to see the harvest 1 year from now. So the cash flow cycles have to be very different, and also the terms, because there are certain crops like coffee where you plant it today, but you're not going to harvest until a few years from now. This is absolutely essential. It's something that we're working on, and in this regard, the technical assistance is going to be very important for our work with the microfinancing entities, and the funding is going to be slightly longer term compared to regular loans that are available to them. This is absolutely crucial. In addition to what Luca was saying, we have two entities, Insotec and FACES, who already have adapted their product to the cycle of sowing, harvesting, and sale. But our mission is to go to entities like the ones we've been seeing in the last 10 years that don't even have these adapted products, not alone processes and risk models. So the technical assistance is for them to be able to launch products that are better adapted to the cash flow cycles of these small producers. Agustin, Luca, thank you so much. Congratulations for your work. We're going to move on to the second part of this morning's session, a roundtable focusing on public-private sectors, on impact investing. For this, we've invited the speakers to talk about the structures to achieve the greatest impact possible. Fernando Jimenez Ontiveros, Director of Multilateral, Horizontal, and Financial Cooperation for IACID. He is going to be online. Matthew Brook, hello again, once again, representative of the European Commission. Welcome again, Matthew. And Juan Llamas, the Commercial Director of CaixaBank Private Banking, moderated by Rodrigo Madrazo, Director General of COFIDES. Whenever you're ready.
Muy bien, muchísimas gracias por la presentación, Marta. Bienvenidos a este.
Thank you very much, Marta, and welcome to this roundtable on mobilization of private equity for impact investing. The institutions that work on promoting economic development are based on the concept of additionality or adding or complementarity. We want our funds to finance projects that do not receive sufficient funds from the private sector. In addition to this concept, we can aspire to mobilizing private equity. This enhances, no doubt, all the actions and the impact of our investments. Nowadays, this is a well-consolidated reality. The responsive figures indicate that approximately in the figures of impact investing in Spain is around 30 billion euros. As far as financial matters, as the saying goes, everyone has a different story to tell. And we have three experts here that represent institutions that are very committed with impact investing. European Commission, IFID, and CaixaBank, which, as we've said, has helped the commercial distribution of the Huruma Fund. I would like to give the floor to the European Commission first, represented by Matthew Brook, so that he could tell us about their experience and how the European Commission has used this blended financing and what their experience has been to attract private equity, with a very strong focus on the impact achieved in the agribusiness and the food industry. Go ahead, Matthew, you have the floor.
Thank you very much for giving me the opportunity to speak again. I will try to respect my allocated 5 minutes. So in very brief, the basic motivation that we have when we enter investment deals, as outlined above, is to have a positive impact upon development indicators by mobilizing capital. I'm getting the simultaneous translation. Mobilizing private capital for investment, or even public capital too. I think, to be brief, we have considerable experience which we are starting funds. EU funds amounting to something like 250 million euros have now been put into investment vehicles of different natures, all of which seek to, in some form, to de-risk the investment. We have experiences in the provision of first loss, like in Huruma. We also invested in the ABC fund in conjunction with IFAD, where we are looking at investments that are below the 1 million mark in terms of dollars, below 1 million, so seeking to reach the smaller firms, but with direct investment or slightly larger tickets with indirect. We've also engaged with KfW in the African Agriculture Trade and Investment Fund, whose ticket sizes are larger, but again, the ultimate objective with these large investments is still to reach and to tie in smallholder farmers. We have on the other side experience with the provision of credit lines, often in conjunction with our colleagues at the EIB, who will provide a line of credit which is on favourable terms to local banks. And then we have an innovative one which we call the Aggregate Facility, which is not a commercially registered facility like Huruma would be, or like the ABC fund, subject to the usual rules of commercial investment funds. This is a facility where we have established a form of continuous collaboration with our development finance institutions, where EU capital is made available, collectively discussed, and we tie into the potential pipelines of our development finance institutions. And that EU capital is then blended with other capital on a deal-by-deal basis, which is a quite different approach, because it allows people to not commit at the outset, but commit on a flexible basis, deal by deal, if it suits their needs, if it suits the circumstance at the moment, if it suits their geographic focus. And we have, of course, recently signed guarantee agreements, which are similar in nature to an insurance contract, where there will be a guarantee agreement signed with the most recent one we have is the AFD, the French Development Bank, and we would sign a guarantee agreement for a portfolio of activities in a particular area with a particular focus, and if something goes wrong, that guarantee is called. But in the meantime, it acts just like an insurance contract in the hope of de-risking the investments that the AFD wishes to carry out, but without actually providing capital at the outset. And then in my last 2 minutes, I wanted to point to some lessons. I think this is what you wanted from me. Some of the lessons from the experience we have are very clear, and they require future work, to be honest. One is that capital simply isn't enough. We touched upon it before. That remains. The accompanying technical assistance starts to contribute to the inadequacy of just capital. So it supports the risk reduction effort. But we clearly see that the pipelines for investors are not easily forthcoming. So is there space for collaborating around the costs of sourcing future investments? The discovery mechanism of a viable investment is very expensive. There are viable investments out there which are not getting funding because they're not being reached by those who want to spend, who want to invest. There needs to be further work around the upstream market development, where we continue to require collaboration also with the value chains development actors, those who are looking at value chains, who are not looking at finance as such, but the value chains work needs to link up to finance. They need to have value chains programs which have an eye to investment, because a value chain without private investment is of limited value in the end. And so the eye, the spirit of saying investment needs to be the outcome of a value chain program needs to be increased. And that would facilitate, I think, some of the cost of sourcing viable investments. And there's a good case for collaboration amongst those who deal with governments. So the embassies, the private sector counterparts, not those who are allocating finance, but those who are in dialogue with government to collaborate together. We see this a bit in the proposed Team Europe initiatives, where we are suggesting that the EU member states act as a more effective unit in their dealings with governments, in their dealings on particular sectors. And here there is space for saying the enabling environment has to improve. We wish to work with you, but things can improve and we have a collective effort to improve those affairs. And then on our side, I think on our side as European Commission, we have a case to answer, if you wish. We have a case to develop, which is developing improved linkages with our development finance institutions, improved linkages with AFD, improved linkages with COFIDES. We've established a basis with our Agrify model, but we realize the tools we have at our disposal are relatively slow. We've not been able to establish new tools rapidly. Huruma was the same issue. It's taken us longer than any of us would have liked. And that's because our tools are relatively new, they're innovative, but we feel we can do better. And we are really hoping for a continued discussion with our counterparts, with COFIDES, with the others, in order to see how we can do better here. I think there is good case to make, and I think we have a good basis in the Agrify model we've established, which ties us into the pipelines of our DFI counterparts, where they are not able to fund yet, but we could collaborate. And there is room for improvement and room for manoeuvre in the future. So we're very much looking forward to that. I think I've probably abused my 5 minutes, so I will stop there. Thank you very much.
Thank you very much, Matthew. Thank you for being sharp with the time. Vamos a cambiar.
Switching languages now. We're going to give the floor to the AECID, represented by Fernando Jiménez Ontiveros. So, Fernando, you have the floor. So you could talk to us about AECID's approach to impact investing and how you work at AECID to mobilize private equity for the same. Thank you very much, Rodrigo. Can you hear me properly? Yes, we hear you. Thank you. First of all, on behalf of the Secretary of State for International Cooperation, the Ministry, and this agency, I'd like to say that I am delighted to be here. I think it's a moment of celebration. As Matthew so well said, you'll know it's been a pioneering project, and in this regard, pioneering projects sometimes take longer than we would have wanted. But on the other hand, it puts us in a situation where we have successfully tested this project. It's one of the ones I'm most proud of being associated to. And the following ones are going to be much simpler. So we hope to continue counting on the support and trust of the European Commission, both for the Spanish Agency for International Development Cooperation and COFIDES as well. I want to call your attention to how delightful it's been for me to meet the managers of Bbva Capital, my good friends Agustin and Luca. I'm not really going to talk about describing the project because my colleagues have already done that in great detail, but I'll just give you a few highlights. For me, this is a very clear example of the direction that Rodrigo has mentioned earlier of how we can join forces, bring together the capabilities of each party, the financial muscle of the Commission and its ability to dialogue with all the parties on the field, all the experience that we had at IFID regarding microfinancing and financial inclusion, but above all, the key player in these kind of projects is the private sector and civil society, both in the donor countries and the beneficiary countries. I think this project fits perfectly well with this whole idea of the 2030 agenda as a cooperation that is not just purely aid, but it is based on empowerment and interaction with local institutions and the final or end beneficiaries. And also, in this particular case, and it's a very special feature for me, that it requires two types of sustainability. The sustainability of the impact of the investment itself, those farmers who are receiving this kind of financing, but just as important that, or even more important, is sustainability of the structure, is testing a de-risking model, which means that the private sector is going to be willing to continue providing funds. And thanks to the technical assistance and the inclusion of civil society, this is going to be a strengthening process that is going to remain, so that the impact of these initiatives are going to go much further or far beyond the funds that we are currently providing. This strengthening process, as we've mentioned in the case of Ecuador, is making sure that all the value chains of financing and the agriculture value chain are coming together, and therefore the microfinancing institutions and small retail banking, their involvement is increasing across this market, and it's affecting the whole production cycle. I also wanted to point out that we're working at the same time through an initiative with the Italian agency and the Foreign Affairs Ministry on the link between migration flows and remittances. And we have a United Nations agency collaborating with this. And this is not by chance, because when we look at the issue of small farmers, we see that very often the down payment that they need to pay for seeds, etc., very often comes from remittances, and where in countries such as Senegal, it's 9% of their GDP. So I think there's a very interesting coming together of the financial inclusion and establishing bonds between all these different parties, and that the European Commission is helping to ensure that this migration is source of development for these countries. And with this, I finish. I think this is very important. We're learning a lot. I spent many years working for a multilateral development bank, and I have followed with great interest this evolution in the development ecosystem of what once was corporate philanthropy and now has become the search for a real business model based on impact investing. And as Bbva Capital is so well highlighted, together with financial returns, it has other kinds of measuring other kinds of returns related to sustainability, and the fact that you can't have successful companies in failed countries. That's why we're working on this, but we want to continue working with COFIDES. Our relationship with COFIDES is highly symbiotic and it's very productive. I think they play an excellent role, and I want to highlight this. I want to give them credit for having materialized this deal, and I want to stress the fact that the Spanish agency wants to continue supporting this impact investing and also to see how we can measure it. And I know COFIDES is being very active in this regard. And I want to also say that this is not just something of one day. We hope that with the leverage, already 90 million euros has already been achieved for this initiative. We hope that soon we could see other similar initiatives where we could see in a much more rapid manner we could apply everything we've learned with this first project. Thank you all very much. Thank you very much, Fernando, for your comments and for your congratulations for COFIDES, and obviously we're sending this back to you for the excellent work that you're doing at the Spanish Agency for Development and Cooperation. And talking about mobilization of private equity, we've seen one side of the coin, two public sector institutions, and to have the full view, we're going to see the other side of the coin, as I said, thanks to the representative that we have here from CaixaBank, Juan Bernal. As I said earlier, CaixaBank has been in charge of the distribution of this fund, and they've really contributed to the excellent fundraising which has been achieved for the Huruma Fund. So Juan, whenever you're ready. Hey, good morning, and hello, Secretary of State for Trade and General Manager of COFIDES and President of COFIDES as well. Thank you very much for inviting me to participate at this meeting. I'm delighted to be here, and so thank you very much, and congratulations for making this possible. We at CaixaBank, in our department, we advise our clients on their investments. We mobilize private equity. And I wanted to talk about, first of all, the genesis of this, how we started working on this social impact project. Second point, I'm going to talk a little bit about Huruma, although Agustin and Luca have explained how it's structured very well. But I want to give you the commercial perspective of this fund, and finally, future policies, where we're heading. So first of all, talking about the genesis of this project, of the social impact investing in CaixaBank Private Banking, we have to go back to 2015. 2015, we very clearly saw that commercially there was a need. No one in private banking was addressing this social value for private banking. And on the other hand, our commitment, we are a bank that started off being La Caixa 116 years ago. La Caixa was created to resolve a social problem that was happening at that time. So it's related to our current mission at the bank, and I will quote, our mission is to contribute to the financial well-being of our customers and to the progress of society as a whole. So this is embedded in our DNA, this responsibility and commitment with society. I also want to add that, as you all know, our main shareholder is La Caixa Foundation through Criteria, that's the name of it, and every year it gives back to society 541 million euro for projects that are aimed at fighting against poverty and social vulnerability. The second point, Huruma, when Agustin and Luca came to me, I remember the first meetings we had them, yes, you may recall I asked you, we can understand this provided it's profitable. You know, we can give donations, we have other channels for donations, and that was the first question, very clear question that I asked Agustin and Luca, and they replied, and they said that it fit perfectly well with what we do with our clients. We primarily look for diversification for our portfolios so that we could preserve the assets of our customers. That's our main objective. I think this financial investment has the sufficient financial return. The story of Bbva and Huruma, we've seen that, they've already explained it, and furthermore, it has social return. So this twofold return is extremely important for us. And also the type of investment, the fact that it's blended finance, this is essential for us as well. The fact that COFIDES is participating in this, it was essential for us because the fund was structured and 1/3 was in private banking, 1/3 was public, and 1/3 was COFIDES. So we also had a lot of experience in structured type of capitals and venture capital funds. We've been doing this for many years, and we have, just to give you an idea, 2.5 billion euros invested in venture capital, so we're very familiar with this, but not so much in impact investing. Between last year and this year, we now have a portfolio of impact investing of 350 million for different managers. So you've seen it's been very successful. When we first started with this, society would see these kind of investments as of high risk, but all of this is changing, and it's changing very, very quickly. Huruma, the truth is that they were snatching it from our hands. In just 10 days that we had it opening for clients, it was completely sold. So it was very successful. And finally, a future policy, and this, using up the last minute I have, I think the business of private banking has two clear challenges. One is transparency, knowing exactly what you're paying for and who's paying for it, although that would be the subject matter for another forum. And number two is to adapt to the ESG criteria for environmental sustainability and governance commitments.
Además, nos va a tocar en toda la composición de carteras de los clientes.
This is going to be included in all our client portfolios. There's still a lot of work to be done. It's going very, very quickly, but it's going to have a huge impact. In the last few years, although the level of investments has been rather low, now capital is investing in these kinds of instruments, and it's being multiplied by 3. I think there's an unmet need. We've started work along this path, but I think we have a long journey to go for all of us. So thank you very much, and congratulations for this initiative. Thank you very much, Juan, and thank you very much for your comments. If you don't mind, we'll start directly with a question for you.
In view of the success of Huruma in raising funds, we have the feeling that this literally has flown off the shelves. Now, I'm sure it really hasn't been that easy. I'm sure you've had to work very hard. So let me ask, you have an ongoing relationship with your clients. What has the reaction been? And what do you think has been more important to your customers? The fact that the fund has impact objectives, or the more financial elements, as in investors feel more comfortable because there are soft resources that improve potential profitability and reduce potential risks? Well, let me say that indeed everything went very quickly. We believed that impact was important, but we knew that what we're doing is something which is financial. So when we explained the product to the client, and Agustin and Luca were present at many of the meetings because there was a roadshow, we always talked first about the financial elements. We talked about the returns, we talked about how it fits snugly into the portfolios because there is that symmetry vis-a-vis other products. It's a complementary product. And then we talked also about impact and the return. And that's the icing on the cake, as they say, in our sales process. That was wonderful for us. And then, you suddenly realize that interesting things happen. Something that was very important was that social element. It's a combination of both factors, a combination of both. As I say, in our portfolio right now, 35 million euros over a 10-day period, which I think is good. That was our commitment. We have 350 million right now. And this, I insist, has only just begun. The customer, the authorities, the regulator, ourselves as banks, we are going to have to ask what amount of the capital do you want to be destined to socially responsible investments, ESG, impact, however we want to call them. Now, usually I think that when you're asked if the returns are going to be the same, I think we'd all rather do the right thing. That's a common denominator. I think everyone wants to do the right thing. It feels good to do good. These kinds of products, especially, they really fit in beautifully, beautifully. Well, thank you for that response. I'm absolutely convinced, and I think that what you've done has been very useful. I think it's been useful for the community of investment funds, and especially for those that are geared to impact. And now, let me look at IACID. I have a question for Fernando Jimenez Ontiveros. You have experience under your belt. You run projects, you finance the public and the private sector alike. You try to mobilize private capital for projects that have an impact objective. Now, from your vantage point, what are the differences? What are the differences between working with the private and the public sector? And then further to that, I know that IACID has increased its activities in recent times, and I believe that you have a program which is ambitious, forward-looking. The Huruma Fund has been the first financial structure, if you will, with a blended approach, with resources that have allowed for the raising of private funds. So forward-looking, as I say, what have you planned for in IACID? Let me be a little bit blunt here. What have you got in your hat? What kind of a rabbit are you going to pull out of it? Well, thank you, Rodrigo. I think that, to be a little bit specific, this is a time of whirlwind activity when talking about consolidating cooperation in Spain. We arrived a little bit late. We were laggards in the mere formalities, because other countries, other neighboring countries are establishing specialized institutions, specialized development banks, national ones. And just to give you an idea, it is true that we in 4 years have multiplied by 10 the approvals at the Council of Ministers, and we're beginning to see that consolidation. But the sum total yearly that we can commit to these activities is 375 million euros. Last year, that same amount for France was over 14.5 billion. Now, the fact is that the French economy is not 30-something times more robust than the Spanish economy. I think this has to do with a process which is going to speed up. I think next year we're going to be seeing a new piece of legislation on cooperation. We're going to be seeing a change in the structure of the agency. I think that, you know, the rabbit in my hat, or I don't know, my wish list, my letter to Santa Claus, if he comes this year in times of COVID, would be a network of cooperation that would allow us to really be able to tackle new processes, new timelines, the onboarding, for instance, of guarantees. We're working in that plan to invest abroad. So that's what I would say. But there's good news. The new minister, the new Secretary of State, the new Director General, I have to say that the relationship is excellent with official state authorities, with the respective ministries and secretariats of state, all the different authorities, transformation, ecological or environmental transformation, and so on. So I think that what we increasingly see is that there are basically three policies, and I'm rambling here, but this is important. There's three policies that we have not coordinated as we might have: sustainability of the debt, international cooperation for development, and internationalization. These policies have their own frameworks and their own differentiated objectives, but at the end of the day, they are very closely intertwined. And what we are witnessing now is that increasingly within the state machinery is that what we need to do together is facilitate that type of interaction with the private sector and civil society. Because what I believe is going to happen is that in the upcoming months or years, we will see from the highest echelons instructions to keep things simple, to ensure that financial cooperation be more seamless, so as to more actively get the private sector and civil society involved. And I think that this has very much to do with SDG 17. We need more nimble, more flexible processes, because if not, it's going to be a perverse selection. Otherwise, the projects that we will see are those that have not raised funding any other way. So if we want to be innovative and work with the private sector, we need to have other processes and we need to have other rules in place. I believe that Huruma, you know, for me, it was really, as they say, an eye-opener, he says in English. It was an eye-opener because I understood what the difficulties are, because there are legal restrictions. So being able to articulate the kind of financial instruments that we need, which are sophisticated, so having a stake, having that special vehicle linked to Huruma and so on, well, you know, I think that we're paving the way and we're all learning. Everyone's learning. Civil society understands that financial cooperation joins forces with technical assistance. It's not necessarily at the service of internationalization, but those companies and the beneficiaries need not only Spanish money, but they need the experience and expertise of Spanish companies. I see increasing appetite, CaixaBank and other institutional investors, growing appetite in this patient capitalism, this impact investment. And I do believe that next year, for all of us, and with the help of Bbva and COFIDES and CaixaBank and the Commission, I see next year being a very important one, because things are going to take off. Thank you. Thank you, Fernando. Matthew, coming back to you.
On the next pluriannual financial framework, para el periodo presupuestario europeo de 2000.
Budgetary period until 21 to 27, the EC has budgeted a huge amount of money. I think it's about 85 billion euros. And with the aim of mobilizing private capital to provide funding for €500 billion. How can this happen? How are you going to spend this money? And you know that you have friends, friendly entities, friendly institutions who will be happy to lend a hand.
I think you saved the most difficult question for me in this case. I think we are right now entering the stage of programming the development assistance as a whole. So we obviously work in programming periods that run 7 years normally. The next one starts in January 2021 and runs to 2027. I think it's important to understand that some very clear strategic orientations have been set for this programming period, which I alluded to before, as did my boss Leonard, which relate to basically addressing far more powerfully climate change, environmental concerns, and sustainability in general. I think that would be the easiest way to summarize it. And that means, in effect, that we have a lot of work to do. It also means we have to recognize that a lot of the activities have a stronger public dimension than before, because a lot of these effects, green effects, social effects, are not captured by traditional financial returns. They're not captured in the balance sheet of a company. So there's multiple channels of work to do here. One is that, and it sounds like a very long-term piece of work, but I think we have to bear it in mind, is that the pricing systems increasingly will need to reflect the costs to society. And that is obviously a long-term piece of work. I think in the shorter term, as I said before, our collaboration, our attachment to investment remains, in fact, is strengthened. Various forms of investment. There's a strong support also to be provided to public investment. So we can use blended finance to support public investment, obviously including public loans, but also grant support to public investment programs. But there is also a continued intention, a continued and increasing expectation that we can pull private sector investors into the existing activities. There is a pool of opportunity that we haven't tapped into yet. So I think the first case is to work with our colleagues in our EU delegations and in the DFIs to tap into the existing opportunities, which we are convinced are there. And then in a sort of parallel process, we do need to address with our DFI partners how to bring private investment into activities which are addressing public goods in many ways, or at least have the dual impact upon public goods as well as private profit. But with the orientations provided by the Green Deal, the Farm to Fork, so with the need to address more powerfully, if you wish, public goods, we will have to find instruments that are more suited to attracting private investors into this sort of instruments we currently have. So instruments that are aiming to achieve more development impact than previously, but still bring in profit for the private capital that we need to attract. And I think somebody previously mentioned the importance of indicators, and I think increasingly we will have to develop indicators that reflect the sort of outcomes, the sort of impacts we hope to achieve. So if we can get clarity on the type of indicators that could be triggers for payments, there's room for cooperation there. But it does require public resources to accompany private resources. Until the pricing system adjusts in order to reflect public cost and public benefit, we will need to find ways to work in collaboration. And that collaboration needs to continue also in terms of genuine local level dialogue. And I don't mean simply in the dialogue to improve enabling framework, which you already touched upon, but also the sort of dialogue that brings together the relevant players. And that is part of this seeking to make better use, seeking to be more proactive in tapping into existing opportunities. And then, frankly, as I said before, we need to get value chains programs closer to the financing decisions. That is a short sentence, but it's a long-term piece of work, but there is room to strengthen that aspect. So value chains have to tie more clearly. And value chains have been put at the forefront of the attempt to make agriculture into a business. And that is the underlying principle, is that agriculture that is looking for finance is agriculture that is a business. And so the work to make agriculture into a genuine business has to continue. And that is development assistance doing its job, but it needs to tie into the notion of investment subsequently. I know that's That's not exactly the sort of answer you would have liked, but we are at the beginning of the current programming period, and I'm happy to keep on this conversation, as I said before. Thank you.
Muchísimas gracias.
Thank you very much, Matthew. Thank you very much, Juan. Thank you very much, Fernando. Unfortunately, our time has run out. We cannot continue with this conversation. To conclude, let me just say that there is this thought to keep in mind. 5 years ago, we didn't really know what impact investment was. We didn't really know how to build the financial structures that were necessary for impact investments to be successful. But today, we talk about a market. We talk about a sizable market. And I would love it if in 5 years' time we met again to discuss what has happened. No longer pioneers. I think at that point in Spain, we will have an ecosystem. Rodrigo Madrazo, thank you very much, and thank you to our speakers. We're running late. We have very many questions. We are not going to have time to provide a response to all of them, but we have an email. We will be providing a response soon. communication@cofides.es. So our final roundtable, we're going to talk about how this impact ecosystem is implemented in Spain. Very important issues are going to be addressed. For instance, is it developed? Is it growing? Is it present internationally? Does it attract Spanish investors, or is it more attractive to foreigners? Our moderator is going to be Jose Antonio Vega of Cinco Dias Daily, and our participants are Alejandro Lorca from Bbva Microfinance, Emilio Yans, Creas Impacto, Pablo Valencia from Qualitas Equity, and Jose Luis Curbelo, President of COFIDES. Jose Antonio, you have the floor.
Muy buenos días a todos. La verdad es que me alegra oír las últimas palabras que ha utilizado Rodrigo Madrazo, de que hace 4 años
4 years ago, we could practically not say anything about impact investing, and yet today there's already a small architecture, financial, institutional, with the support of institutions such as COFIDES, but essentially the banks, the commercial financial institutions, and it's making progress, slowly, but it's progressing. These might not be the best times to attract people to contribute their savings and to turn people who want to turn their savings into impact investing because of the COVID crisis. But as you all know, I think that this kind of initiatives I expect is going to have a brilliant future. It's true that all large companies are more and more involved in the development of the Sustainable Development Goals. I believe all large corporations and financial institutions are including in their plans corporate social responsibility items. And here at this roundtable, we're going to talk precisely about how we build this sustainable investment aimed at impact investment for development of the poorer continents, and how we are building this from Spain. I would like to greet all the people joining us at this roundtable, at this conversation. Alejandro Lorca, Financial Director of the Bbva Foundation for Microfinancing. Emilio Ayaz, who's a partner of Creas Impacto, I think with us today. He's with us virtually, just like Pablo Valencia, who's the partner and investment director of Qualitas Equity. Welcome, you. And as the host of this organization, José Luis Curbelo, president of COFIDES. For 4 or 5 minutes, please, no more, could you please explain what your work is focusing on at the moment, and is it aimed at developing these impact investing initiatives, and how we can turn this into a sector that is under development? It's no longer just in baby steps, because we've heard about the amounts of money that have already been raised by the managers who are working for the Huruma Fund, and they're really quite significant. And they're already being implemented in very specific projects. But I'd like to know how we've gone from a developing sector to an established sector, which has the features necessary to attract investors, that very often investors who may need to assume a little bit more risk, but probably the return is maybe not tangible. It's slightly more intangible, but the nature is rather more significant than other kinds of investments. So if you like, Alejandro, could you start? What is your perspective? What are you doing specifically on this? Maybe you could tell us within the next 4 or 5 minutes, and then we'll go into details.
Muchísimas gracias, decía. Nosotros nos ocupamos de promover el...
What we do is promote economic development for society to make sure it's sustainable, and people living in environments with very, very low income. And I will explain in a minute how we interpret low income in peri-urban areas and of high exclusion in Latin America. Bbva Foundation was created a few years ago, and if I may show you a 3-minute video.
Todos los días en nuestras operaciones.
To transform our world. This is what the Bbva Microfinance Foundation does when promoting the development of vulnerable entrepreneurs in Latin America. A roadmap it pursues every day, aligned with the Sustainable Development Goals of the United Nations Agenda to make the world a better place by 2030. It makes use of a technological platform that gathers information from its institutions in 5 countries. With the experience of its founder, Bbva, and its innovative vision, the foundation is committed to harnessing the digital revolution to reduce poverty, to transform financial inclusion to reach places nobody else can, and to bring financial services closer to entrepreneurs, avoiding unnecessary travel and the cost it entails. With the new technologies, we train our thousands of loan officers through a digital campus which drives the progress of entrepreneurs, most of whom are women that we support with specialized financial services and training. And for them to improve their lives, we design programs that enable universal access to water and proper sewage facilities. This way, we facilitate growth by making these tools accessible to all. And to make sure that no one is left behind, we also innovate in distribution channels through a mobility strategy based on digitalization, which brings services closer to entrepreneurs, simplifying their operations and promoting equal access to opportunities. Thanks to our social performance assessment, we know that our entrepreneurs reinvest part of their incomes in improving their homes, which is frequently their place of work. This is why we offer financing and technical assistance so they can make that project come true. In our commitment with sustainable development, we protect the planet through more environmental-friendly practices that we promote among our entrepreneurs and in the daily routine of our employees. Our productive finance methodology also allows us to reach the most vulnerable during key moments, like the Colombians, who as of today are compelled to start anew after years without peace. We forge alliances with leading development partners as a benchmark institution in the international microfinance sector to continue supporting today's and improving tomorrow's.
Pues hasta aquí. Esto es lo que hacemos.
What we do on a daily basis. As I was saying, we don't just provide financial services home by home to over 2.4 million customers that we currently have. We've been on the field for the last 12 years since we were set up by Bbva as a foundation. And throughout these years, we've been working on development, focusing on the areas where the level of financial exclusion was greater. And then we moved to other geographies in Central America and the Caribbean. We're now a very important reference in this area where, although our interpretation of what microfinancing is goes beyond what a small loan is, and I'll explain very quickly what this means. So I'll try to give you some details of what we do, why we do it, and how we do it. You could see here what the OECD is highlighting in their 28 report regarding financing for development. We would be included in the ODA reporting sector within the philanthropic segment. So you could see we are ranking in the second bar. It's going to be very difficult to reach the first one because they're very, very significant, but we hope by after 2019, we're definitely far, far above those ranking in the third place. So the work we do contributes to development to the same extent that other multilateral entities and public sector and private sector, but according to the OECD methodology, we're included within the foundation sectors. This is one of the top authorities at the OECD, and he was kind enough to highlight when their report was presented last year, he highlighted the work that the Bbva Foundation does in this regard. Where are we operating? Why are we in LATAM and in these high exclusion markets? First of all, as I said, these are markets with a very high financial exclusion rate where we're continuously being reminded that exclusion is the greatest obstacle to overcome poverty, and entrepreneurship is the best ally to overcome poverty. So our interpretation goes beyond what is a mere banking operator or someone working in popular segments. What we try to do is provide customized solutions to each and every one of our clients operating in different geographies, in different economic environments, and with different needs. Obviously, working at over 2,000 meters in the Andes has very specific challenges because they're facing numerous difficulties as far as connectivity. Unfortunately, we have technology to overcome these problems. These are just some figures. This is at the end of last year. We have this number of customers, 2.2 billion. In Colombia, our company is called Banca Mia. We have banks and non-bank that only serve people with very, very low incomes investing in their businesses. Why are we investing in their businesses? Because this provides additional income. This additional income leads to an accumulation of assets, and it helps people progress. We're continuously measuring the progress of these people in their daily lives, not just in their businesses, but also in their daily lives. And we have a huge database and many reports on impact, which is absolutely spectacular. Every year we publish our annual report, and you can see the level of detail that we can achieve. At the close of the year, our portfolio was of around 1.4 billion euros, and we, in just 1 year, prior to the pandemic, we disbursed around 4,000 loans a day. 1.4 billion euros, and it's really quite complex to be able to work with this 1.4 billion euros, but we made it, and there are many different people and many funds and managers and institutions that help us to do this, and we're very compatible with all the institutions. We work with American philanthropy, European philanthropy, and always on the basis that inputs are paid at market prices. We have the ability to commit local market issues, and sometimes we work with Spanish and Dutch and American organizations to try to, as we've said here earlier, integrate or include in all our projects all these different players. Not all monies are the same. 84% of our customers are living in a situation of vulnerability. 37% are poor, and 47% of those are financially vulnerable. That means that at the most they make $5.7 a day. You know that the limits of poverty every year, depending on the standard of living in each one of these countries, changes. But what we work with is with these people. The client is at the center of our activities, and they're not just financial services that provide, but a whole range of services that are customized and adapted to the needs of these people, which includes funding for their businesses, which very often takes place in the individual's home. Other times we want to protect their assets, and we want to give them different types of insurance policies. We're working on a very strong line of business that has related to healthcare, and other times it's just a matter of protecting the very few assets that these customers have. Over time, and this is what I want to highlight, over time, entrepreneurship, when you invest adequately in entrepreneurship, provides surplus assets for people. Their assets grow significantly, almost at 24%, and poverty, which is what we want to reduce, the poverty of our customers is gradually reduced over time. Our statistics indicate that after 3 years of productive entrepreneurship, people stop being poor. So this helps us continue with our work. 4 or 5 points before I finish. What does COVID mean for us? When COVID started, just like any other operator, we started working on this, and what we did is focus all our transactions in those production areas that are going to suffer most because of lockdown and because of the crisis in general that we've all experienced, and we've seen how it's moved at different speeds and different geographies. At all time, we've continued paying our customers, and we've been able to do this because we have technology that doesn't require contact with people, direct physical contact, and because of how well we know all of our customers, which helped us know in advance that after the pandemic, their businesses would recover. In other cases, we've allowed them to become digital. And the people who had a physical business that had to close down, they've reinvented, they've changed it, and we funded that online investment so that they could serve takeaway meals as opposed to doing it in the restaurant. I don't want to forget that our operations are a gender operation. 60% of our clients are women, and I don't want to forget how important for our objectives are helping people who are migrants or displaced persons. I remember that Fernando Tiveros mentioned the need to collaborate with all the various players. For years now, we started working with the peace process in Colombia, and we set up together with the Ibero-American organizations and Colombian development banks and other players. We set up even some of our partners from other geographies. We work together with the only purpose of helping people who were living in those areas affected by the peace process and everything that followed, so that they could learn and that they would have the necessary resources to have a productive business and that could start generating income. And now we've reached now 40,000, and we want to, our aim is to reach 300,000 of them, and we'll keep growing. And with this, I've finished. I don't want to take any more of your time. And since we've been working on this, we've reached 7 million people. There's still many more to reach. It's the most unequal region in the world. In Latin America, there are 165 million people who are poor, and we're working with 2.5 million of them. So we have a lot of other people to reach, and Agustin knows this very well, and the current geographies are the ones that you could see here, but this might change over time. People displaced, migrants, loans for education. We have 40,000 clients that we've helped obtain water systems when they didn't have them before. And green entrepreneurship. I think Agustin mentioned earlier the importance for the Huruma Fund for the ESG. In Arequipa, we have engineers, agricultural engineers, devoted to helping poor farmers with small plots so that they could develop their organic farming, which will then go to a cooperative, and then it will be exported for consumers. We're devoting highly specialized resources to this, and the same for housing and other sectors that we work in. And that's my presentation about what we do.
Muchísimas gracias, Alejandro.
Thank you so much, Alejandro. I have to say that congratulations are due. Emilio Ayans from Creas Impacto, what is your experience? What is it that you do? What do you do to improve the lives of the poor of the world? Yes. Hello to all. And thank you very much for allowing us to participate and for asking us to share some time with you today and with other friends from COFIDES. I would like to explain briefly what CREAS is. I know that there are slight issues with the connection. I'm sorry about that. So first and foremost, we need to talk about our purpose, our objective, what it is that we want to do, what we want to share with the world, because we are an impact fund, and talk a little bit about what CREAS wants to achieve. We want to do things that add and that are commonsensical. Everything that we do needs to make sense. It needs to make financial sense, and it needs to make social sense. And this wanting to make sense allows for incorporating profitability and making the environment and these specific needs the heart of our activities. We need to be able to prove that one can be profitable all the while making the lives of others a little bit better. We began to do this some 10 years ago. The whole concept had just been coined of impact investment, and as happened in the case of other startups, we availed ourselves of the resources we had, and we were able to try to change the world, make the world a little bit better, and this resulted interesting to some other participants. Back in 2012, we undertook more investments, and to keep things simple, in 2018 we raised funds and established CREAS. We're adventurous. We began to be adventurous 10 years ago, and we were the first impact fund that benefited from ICO investment, the first one in Spain. We like to say that some things are very important, and we like to explain what we do and why we do it, but we feel it's also important to explain how we do it. Because what is the good of investment and thinking of changing the world if you don't do it in a consistent way, in a way that matches this objective? Which is why we thought that this certificate was very important. We believe it's important that other companies onboard this project in the way they function. So what we do is, as I said, we have a fund which we invest. We invest in education, in welfare, in caring for the elderly, inclusive models, in the case of persons with different skills, improve transparency and traceability and value chains, and finally, include sustainability, including urban mobility and nutrition. The models in place are going to be of use, of course. Ever since we launched this fund, which was about 2 years ago, we have carried out a number of initiatives, 2 in the field of education and another in the area of the care of the elderly and dependent persons. In other words, we have focused our initial investments in social impact areas. These operations, these activities are keeping us busy, and we're focusing on the circular economy and, as I mentioned before, urban mobility. I think that all of us are thinking about what the world will look like after COVID. Well, as we've heard from other speakers, I have to agree that COVID definitely changed our lives. We're all aware that some trends have picked up speed, such as sustainability. There's no doubt about that. I think COVID underscores the importance of inequality. In the case of Spain, cultural issues, the issue of youth, dropouts, healthcare. These are areas of activity which are part of our leitmotif. I believe that we are at the service of entrepreneurs who need to provide a solution to problems that are very important. What we need to do then is be with them, provide them support with capital, resources, intelligence, experience, hard work, with positive values, as they say. And that is CREAS. That's where we are. Thank you very much. Thank you, Emilio. Pablo Valencia now, from Qualitas Equity. What is it that you do, and what is it that you contribute to this theater, to this ecosystem, which we wish to build in Spain? Thank you. Good day to all, and thank you very much for your invitation. Congratulations are due to Bbva and to COFIDES. Congratulations for launching Fondo Huruma. This is something that has made us tremendously happy. I'm a partner of Q Impact. This is part of Qualitas Equity, and we have a twin-fold objective. We want to be profitable, and we also want to try to make our society better. So we invest in private companies which already, with their goods and services, tackle the challenges that we face in Spain. We do not want to sacrifice profits, though. What we want is to align profitability and sustainability in such a way that this social object become a competitive advantage for these companies. In other words, achieve even greater degrees of profitability. When we thought about launching the fund, we, as I said, wanted for this element to be a very important part of it, the social element, but with guaranteed profitability. Now, when deciding upon where to invest, we said, what are the major threats we challenge, or challenges rather, that we face in Spain? So we looked at the agenda that Spain committed to achieving these objectives by 2020. Those 7 intermediate objectives, only one of them is going to be achieved. So you have persons at risk of exclusion, youth unemployment, emissions, renewables. We know that we are lagging far behind of achieving the very timid objectives that were initially set forth. So we understand clearly that the involvement of public administration is absolutely essential, but not enough on its own. Therefore, the involvement of private capital, the private sector, to provide a solution to these problems is increasingly important. What we have done then is we have sought for entrepreneurial decisions that will provide a solution to this problem. In Spain, 1 of every 4 Spaniards, 12 million persons, are running the risk of social exclusion or poverty. We can invest in different companies, in job creation centers, to provide an opportunity to persons who have lacked those opportunities. We have 3 times the European unemployment rate. We have twice the high school dropout rate than the rest of Europe. We're not doing enough to give our young people an opportunity. How can we give them more opportunities is the question. And the answer is, on the one hand, we have university graduates who are unemployed, but we don't have technically skilled workers. We do not have vocational training centers. We do not have sufficient entrepreneurs. If we could help companies that foster these types of initiatives, perhaps the lives of our youth would be easier. We have a very, very aged population. Our demographics are terrible, and this is going to make things even worse in Spain. We have 1.3 million elderly Spaniards, and this is not going to be improved. And we see that our wonderful countryside is losing its inhabitants. We have huge swathes of Spain that have less density in demographic terms than Lapland. And if we look at the environment, we have focused on the lost causes, the unattended markets. We've realized that the most expensive contamination is we're fragile in the Balearic Islands, where we have diesel and coal-based electricity. So it's a wonderful geographical venue, but the pollution is just unspeakable. This is something that we cannot understand at this point in time. We are launching initiatives to have hybrid solar battery in a given area where development of renewables is not as visible as it is on the Iberian Peninsula. And the same can be said about the penetration of distributed generation alternatives. We are wagering on ensuring that persons no longer need to carry out these investments to have more efficient solar-powered homes. Now, this is very social, as you can see, but how are we going to be able to invest profitably is the question. Well, we've had 6 rounds of investments over the past year. These are companies that are growing at double-digit rates, and the EBITDAs are very healthy. We've invested in an ecofin, an industrial ecofin, which provides employment to youth coming from immigration centers. At this point, 17 youth are hired, and 300 training sessions have been made available to persons without opportunities who will be able to work in hostelry. We've invested in robotics, which is Spain's leader in terms of robotics and programming for young children, so that our young children become familiar with this field of activity and perhaps train to be chemists or engineers or physicists. We have an award, online and offline, for vocational training, so that our youth consider this as an option, because of course we have a deficit in Spain of vocational training centers. We've invested in this is Europe's first company to invest in this company and invest its proceeds in countries under development. And we believe that what they're doing is important, but it's a social brand, one of the more important ones in Spain, where impact is definitely taken into account when investments are considered. We're working on 6 projects in Menorca, a biosphere reserve where the generation of power is thanks to a very polluting plant. Mao is actually the city nearest to this plant, and it's very heavily polluted, and we're going to be contributing to these projects which are going to cut down on these polluting emissions, and we're working with Perfecta Finance for these installations. We've imported from the US, and solar consumers will have savings as of day 1. So our commercial proposal is much more interesting, and especially we capitalize from securitization funds in order to fight climate change, which is essential, we believe. And now and until the end of the year, we have a 7th investment, a special employment center, which is going to provide employment to 500 persons with very similar productivity levels to a traditional company. I just wanted to explain that yes, entrepreneurial solutions are possible for companies that are growing healthily, and that at the same time are tackling the main challenges that we have in Spain. Not only is it possible, it is essential that we so do. And our project, our aspiration is to prove that we can return to society in financial and social terms, all the while attracting more capital. The private sector will begin to contemplate that 3rd requisite in its decision-taking process. So not the icing on the cake, but ensuring that all these concepts are on an equal footing. We have to think along these lines, because if we want for things to improve, we need the funds that the private sector can provide, and impact investments are absolutely essential. It's a way of showing that there is this standard success which will be used by other professionals in order to foster this philosophy and adapt it to all of their potential portfolios. Thank you very much to Pablo Valencia, Jose Luis Corbello, COFIDES chair. I know that you do a lot. I know that you're very active, but specifically here, could you give us some details? Microphone, please. Yes, thank you. I was saying that the challenge we face in this sector of development and how to provide a solution to problems which we believe must be solved for the welfare of society in general, it's the specific case of Spain. The absence or the weakness of the ecosystem in which we operate. There's a series of stakeholders who are present here. They are the exception to the rule. They are the exception. But if tomorrow, and this morning I was actually talking about this with our friends from Bbva, if tomorrow we decided that we wanted to launch another project, an impact project in developing countries via financial intermediation, via activities involving other value chains. This was very interesting, by the way. It was fascinating to hear about the health-related issues at Insotec. Well, in Spain, we don't have those stakeholders. This is a fact. And Luca gave an explanation. He said it's difficult to find people, and you need to have training, they need to have lived abroad, they need to know not only the technical issues of financing activities, but they need to have relationships and so on. So this is a challenge. This is a challenge. And what is also true is that above and beyond whatever it is that we know or don't know how to do, we understand that in the future, if we want to tackle not only the SDG objectives, but if we want to actually be close to them, we're going to have to mobilize immense amounts of resources, capacities, tangible and intangible, and in some cases, institutional ones as well. And in some cases, as I say, they are either not there, or they are not fully developed, or, well, they need to be built. And this, despite the fact that we're delighted and COFIDES is very happy. Over the past 2 years, it's Huruma that we've launched. Now it's the energy project, which is beautiful. The electrification off-grid in sub-Saharan Africa. We have a fund with the International Cooperation Agency dealing with cities in different places. And there's another project that looks at financial inclusion. So yes, we are taking steps, we are progressing, and we should be very proud of our progress. But we have a very long road ahead of us. And I think it's important that we remember that what agencies sometimes do who are active in development is we skim from what there is. And there's not much milk under that part that we skim. You know, impact, investment, for development, for cooperation, for countries and developing countries. At this point in time, at least, I have to avow that, to the best of my knowledge, we do not have that many potential entities. And then there's something else which is important, which is the perception of risk. I thought that it was so interesting. Your non-performance ratio would be desired by the Spanish banking system, which is more than ×2. So that's the perception. People think the poor don't pay. Well, the risk in microfinance, well, we've learned we do a good job. There's those impressive data that you track so carefully. Impact, how they leave poverty behind. This is all about the perception of risk. Professor Collier addressed a very important issue before, which is that the role of the public sector is to back pioneers. So the first to penetrate, the first to do something. Once you've developed a sector, that sector will grow. So now, in many countries in Latin America, which is what I know better, that's why I talk more about Latin America, because I'm more familiar with Latin America. Well, microfunding is an activity which is for real. Organized, it's subject to regulation. It works, and what they need is more resources, more technical assistance, but nobody is going to say that this is a sector that entails a tremendous risk or that it's impossible to penetrate, because that's not the case. But a number of stakeholders were essential, and they were players at a given time, and they were pioneers. They were pioneers. Fernando talked about that also. We both, back in '91, when the Inter-American Development Bank established FOMINC, we began to work with these projects, which we called PEFs, small microfinancing projects. We provided 200,000 euros and 300,000 additionally to Learn to Lend, and that was the beginning of a sector. So they played at being pioneers, and I agree that is the role that public entities, cooperation agencies, the European Union, that's our role to perform. So that role, at this point, we need to concentrate, we need to focus on that ecosystem, which will allow us to slowly become all that much closer to the ultimate challenge we face, which is to deal with poverty abroad and at home, because poverty abroad is an issue, but so is domestic poverty. It's as if it were two different worlds before, wasn't it? But, before we talked about the Canary Islands, irrigation, Lampedusa, Greece, underdevelopment. I mean, there's no longer two worlds, There's not underdeveloped parts of the world, because that has an impact on our countries, and our resources are not sufficient to take on those problems. So we need to be able to develop And we need to be able to have impact investment which will really be sufficient to deal with the social problems creatively. And I liked what Professor Alonso said before. In an entrepreneurial spirit. Our colleagues at Qualitas, when they were saying what they did, I thought, well, the interestings are okay, but what's really important is that somebody has sought a solution to a social problem. So they are social entrepreneurs, and I'm sure that the problem will be solved, at least as efficiently as others. Those are difficult sectors indeed. And finally now, I need to concentrate on the role of the public. I believe that all institutions now, the European Union on the one hand, for the domestic and foreign markets, the Spanish Agency for International Cooperation, we at COFIDES, all of the institutions that are active, I think we're all convinced that we need to be able to join forces, to work together, and to contribute as best we can, so that we mingle resources. So the Huruma Fund is a way of providing private sector resources, concessions, but which aspire to a reimbursement, resources to provide technical assistance and expertise to improve the productivity of the ultimate beneficiaries of those investments, and we who have a certain capacity to structure transactions and think about innovative solutions to problems that exist and that, if they did exist in the past, were not the source of concern that they are now. Thank you. Microphone, please. I'm sorry, he's not using his microphone. I'm sorry, he's not using his microphone. Thank you. What is your perception? Those of you who work with customers, what is your perception? How do you see that risk? When Jose Luis was talking about that, we begin to understand it differently from the way it was understood in the past. We need to remember that interest rates in the world are at zero and perhaps negative, and definitely real rates are negative. So making profits is increasingly difficult. Profitability is a challenge, and this becomes in turn a stimulus to seek this kind of a financial product which has a social element added onto it. And as you've said, we heard from Alejandro, our NPL rates are of 3-point-something%. There are very many mature systems where we see different numbers. So what is your perception? What are you seeing in your investor? Is it difficult to raise funds? I imagine that in your case, you're an international bank, so you don't have that problem. But in the case of CREAS or Qualitas, I would imagine that availing yourselves of those resources is different. And I would like also, although we're running late, is focus on a detail that Jose Luis talked about. Jimenez Ontiveros in the previous roundtable also made a reference to it. And it's that legislation on cooperation. Do you think that that opportunity will allow us to close that circle? Because the political will seems to be there to provide that design. Agenda 2030 should be more than just a design. There should be an implementation. I imagine if there's change in legislation, it might be possible, but it calls for that change, and it calls for the desire to mobilize resources towards this activity. So, Alejandro, perhaps? This is an interesting question. Thank you. And it's important to underscore that Fundación was created by BBVA, and BBVA contributed initially, and those 2.2, 2.4 million, well, that's up to us. But definitely, that name counts. Being BBVA is very important. I would say that our experience, and I have a colleague with me here, our experience teaches us that there's three things to more quickly mobilize investors, to spur them on, as it were. First, activism. In other words, today's investor, impact investor, let's try to differentiate between traditional ESG and the world of impact investors. What an impact investor now desires is to be in the project and wants tangible results. You know, when we say often enough, I need X profitability, and apart from that I want to see that social value, well, that social value now is show me the data. I want to see the results of the project on the basis of what you told me, what you promised, what you committed to. And this is applicable to job creation, poverty reduction. So you, as an investor, can condition your funding to some specific aspects or objectives, moving objectives. So I think that that's important when we're trying to attract resources. Secondly, trying to collaborate. Let me backtrack. Our experience teaches us that whenever we have reached out to complex projects, trying to find not only a solution for one person, but rather a solution for a town, for a project, for a specific economic reality, it has been much easier to speak with the North American Development Agency or the European ones or private entities. So the existence of the project as a common entity is very important. It's a very important element when it comes to mobilizing those funds. And then third, and this is a little bit different in Europe from what it's like in the US or in Asia, philanthropy, which is what it is. Philanthropy over the past 10 years has changed radically. It's really not what it was before. Philanthropy not only wants impact, no, it wants its wealth become something else and continue to survive, which is exactly what happens to a development agency or a private investor or any private player. So that vision that the project needs, there has to be a rationale. The project needs clearly specified impacts that are measurable. I mean, photographs are no longer good. You have to talk about results. And that vision, that total around a project, well, in our experience, this is something that has really been very good. Awareness raising in today's investors regarding ESG, they're very sensitive, very sensitive. Raising 1.4 billion every year is complex, but it's not an impossible feat. And not because we're BBVA, but it's rather because we can talk about the local, we reach out to international funds, we talk to development agencies, we establish collectives, we build funds to develop projects. So right now the architecture in the market, and especially the technology, really does allow to achieve something that 10 years ago was knocking on one door after another. So technology is essential. It is essential to attract private investors. Thank you. Emilio, please. Well, I have to say that in response to this question, if we want to do our best in the market, there's different types of investors. You have some who are more marginal than others. I think that at the end of the day, you need that combination. You need to have the right incentives in place. And and some investors will be attracted. What is very important is the market there. Investors, I think, want to see that the market, when talking about impact investment, they need to have teams, they need to see that delivery is possible, good delivery, and then they need to be able to compare, which means that they need a standard, an underlying standard that allows you to make your choice among different options. So in Spain, when we talk about private investments, well, there's not very many players. And as Pablo said before, we're proving that it is possible to conjoin profitability with social impact. We're looking at results and we're looking at execution also. That's where we're active. And the times are good. As I said before, awareness has been raised about the importance of these facts. And this is going to allow us to see deployment, but we're working on that. We, as managers, need to prove that it is doable, it is a possibility. And what I'm seeing is that this is going to be attractive to other potential investors once we have proven our success. Thank you. Pablo? I have to say that I agree with Emilio. This is the very beginning of these activities. In terms of equity, there's experience and so on, but in private capital funds that have to do with impact investment, it's the very beginning, and we suffer from major issues. We don't have track record, we don't have a track record, and we don't have the size, because this is our first generation. We are the first generation. So this is the valley of death that has to be crossed, and we're doing it with investors who know us, whom we've worked with before. These are private investors, and they're the ones who are wagering on us. And of course, public investment is essential to achieve that scale, achieve those levels of experience. And what we would need to have is for Spanish philanthropic entities to participate. We're not being lucky at all, as well as other major players, of course. So far to date, the initiatives launched are pretty well independent. I'm talking about social impact. It would be wonderful if those great fund managers, those movers and shakers, would think that impact is important and join us. But as we said before, well, we have to complete this part. We are pioneers, and we are trying to kickstart the market and mobilize as many funds as possible. Thank you, Pablo. Jose Luis, finally, that second question, I think that you'll have a solid answer. You've made a reference to the importance of the public sector, and we've heard that we need to have legislative changes and explicit official backing for this type of an activity. Yes, I talked about Fernando Jimenez Ontiveros talking about France devoting 11 times more, I think. Last year, we talked with our colleagues, the British COFIDES, if you will, and Mr. Collier was here, and they've just approved £5 billion to invest in developing countries with the private sector. So we're talking about huge amounts of money. I think that some steps need to be taken. One of them is to ensure that everyone, in political terms, understand that the private sector is a key player in development policies. It is not only funding, which is important for governments, yes, but above and beyond that, you need to look at the private sector. You need to talk to the government in place, yes, and then you need to go to the different charities, because there are those who don't have, there are the poor, there are battered women, etc. But we need to identify the new player. There is a new player in the private sector, essential for development. And this has to permeate all institutions and all players. It's not only the institutions, it's also the NGOs. It's international cooperation. We could talk and talk about this, because if you work with the private sector, you need to work thinking about how the private sector works as well. You cannot think, you have to forget a little bit about your ideological stance, which are not appropriate to work with the private sector. Let me just leave it at that. Secondly, we need to be able to understand that up north, many things are happening in Europe. Europe is advancing towards climate and sustainable development together with the Development Bank. We need to understand that, and we need in our country to have the kind of institutions that will make it possible to work with Europe, with this European Bank for Climate and Sustainable Development, not only because we need to copy others, but because those huge resources that the European Union is going to devote from 21 to 27 to development issues via the private sector, many of them, are going to align, and we're not really used to participating above, as I said before, and beyond other projects. So this is very important about the financial architecture at an international level and about our own domestic financial architecture. So we need to align with the strategies that are general in nature, which Europe uses. So there's sustainability, there's climate, there's digitization, there's education, there's health, there's value chains. So those are the sectors, because the challenge we face, which is, as of 2021, Europe focuses on, well, there's going to be resources available, but if there are rules in place, and we will have to adapt and just think about that perimeter. So I'm convinced that the Spanish International Cooperation Agency, COFIDES, the Secretary of State, and so on, all of those paths are being studied. As we said before, we need to remember what the objectives are and what the steps are that need to be taken in order to achieve the objectives. Microphone, please. We have received very many questions via the chat, so over the coming few days, we will be providing a response to them. The time now has come to say goodbye. Thank you all very much. Thank you to the participants. Thank you for those of us who have been with us in real life and those who have been with us virtually. You've organized the session. You have helped us be disciplined. Thank you to our technical team. We know how difficult it is sometimes, and I think that the results have been brilliant. So I certainly hope that this not be the last of our meetings, because the Huruma project involves also, well, the European Union recommends that we reach out, that we disseminate our experiences. So we will organize different events. We will do something which we believe is very important, and you've talked about this, many of you. We will be evaluating, we will be sharing, we will be analyzing the impact, because this is what will allow us to mobilize the private sector. We'll be able to say to the private sector, these are the results, going beyond the prejudices or the opinions that we might have. Thank you very much. These projects were all very interesting, and actually, I have been a journalist And I've organized some radio interviews in order to, in fact, reach out. So thank you very much to all, those of us who were with us in real life, those of us who were with us via streaming. And remember, on our YouTube channel, we will be making it available to all. So once again, thank you very much, and I do look forward to seeing you next time around.